Okay, and we are live. How's it going today? We got Josh Dobson, mortgage expert. We're going to talk macro today. Let's get into it, not waste any time here. First, what do we get? Today is Friday, October 13th. Ooh,
Yep.
big
Good old
scary
Friday.
day. Yep, scary day today. Market is dropping. Everybody's fearful of an attack from the geopolitical war going on right now. But let's take a look. There's an attack on the market. So we got first off 6 a.m. this morning. We got Fed Harker speaking. He was very hawkish. He said the Fed is likely to be done with rates. By the way, we're going to go over rates. We're going to go over the technicals at the end. We're going to go over the macro geopolitics, basically dive into what's going on in the market. Okay, consumer. But first, let's go over this data that we just got. Try to digest it a little bit. Okay, it's real simple here. Michigan consumer inflation expectations for the next 1 to 5 years, both up. Market did not like that. Consumer sentiment down. Market did not like that. But we did get bank earnings today, this morning. Big banks, the big guys. United Healthcare also, which is pretty much a bank for the government. And so you got, we got a beat on the top line. We got a beat on the bottom line, and guidance higher for JP Morgan, Wells Fargo, BlackRock, but the market still barfed, and we'll go over those technicals a little later and find out what that actually means. Okay. Now, I guess real quick, Josh, any thoughts on consumer sentiment falling today? I mean, going into the holiday season, and why is Fed Harker a little more dovish, you think?
I mean, honestly, it's not a shocker. Like you and I have talked about on multiple different occasions, the conversations that I have on a daily basis with the customers that we deal with, there's a lot of, uh, I guess, issue with how things are going, the cost of everything, what people are able to buy, what they're not being able to buy. The cost of housing continues to rise. I mean, we saw the CPI number yesterday, and you saw shelter was up. It was killing us. You got energy costs going up. I mean, there were some things that had come down, but a lot of that was year over year. And when you're looking at year over year, we're comparing it to a massive spike last year. So, I mean, it's all relative, but I think the misnomer that inflation's going down is just the wrong verbiage to really use. It's going up less, but it's still hurting us all because we're trying to be able to afford our normal lives, and it's just difficult.
Right. I saw, I don't know if we spoke about this, but we talked about it, I think last week. I can't remember now, which was, it showed the combined, come on, Josh, inflation's going down for the stock market guys. Inflation's coming down, right? For the economy guys. Okay. Inflation is too high. But if you're in the stock market, I think we're good. Me and Josh might disagree on that, but that's okay. That's okay. That's why we got Josh here to prove me wrong. If I, don't make any sense. Number one. Number two, I saw there was a chart, Trueflation. They showed the compounding of since 2019, 2020, the
Yep.
compounding, it was 20%.
Yeah.
So in this is what people are feeling. I'm thinking people are really feeling the compounding effect. Basically, you're 20%, you're 20% less richer. I mean,
Yeah.
if you're broke, you're 20% less more broke. So that was the compounding effect. And I think that's what people really feel. Maybe that's a gauge of sentiment for the consumer, compounding inflation. Okay, so let's go to, oops, didn't mean to throw you off there. Trying to get rid of Josh for saying inflation's going down or not going down. This was interesting, Josh. We had the dollar actually rise with bonds today,
Yep. With yields.
with yields. Yeah, right. Well, yields fell, dollar went up for the first. Usually yields are up, dollars up, but today was a little different. Was it the bank earnings? I don't think so. Was it the consumer inflation expectation? I don't know. I'm thinking this has to do with the geopolitics. I think you called this
Yep.
earlier, the
Flight to safety.
flight to safety, right? Flight to
Yeah.
safety in dollars, and bonds, and give us an explanation why that is. Why does the market see, or what do you think? What are your thoughts on it?
Yeah, I mean, so it's something that we use a lot when we're discussing and figuring out what's going to happen with interest rates. When you see geopolitical conflicts, especially on the world scale, that might pull in the United States, a lot of investors will try to park their money in safe assets, and so it's what we call flight to safety. So instead of putting themselves in a situation where they're in the stock market or something that can be negatively impacted by a geopolitical war, obviously you can invest in some of the war stocks, but people have a tendency to pull their money out of markets where there's a lot of volatility, especially when it comes to geopolitics, and park their money in a safer asset. And the fact that the U.S. dollar is the world currency, bonds, the U.S. is never truly defaulted on their debt. It becomes a safe place for investors to kind of park their money on the sideline while the conflict plays out and we see the scope and scale of it, especially when you're talking about Israel and Hamas, and the fact that there could be neighboring countries, offering to come to the aid of Gaza, and the U.S. having to, basically stand their ground and say, "Look, anybody else gets involved, we're going to protect Israel."
Right, and we got I think this really started once Hezbollah started attacking from the north,
Yep.
South Lebanon, and it's like, whoa, okay, Jordan, where do you stand? Syria, where do you stand? Do we send
Yeah.
a ship? And yeah, you get that kind of flight to safety that might start to pick up. The interesting thing is if this continues, premium stocks, in my view, might keep going up because yields are down. The dollar's up, but that just means if you suck at, financial engineering, you're screwed. But if you're Apple where you have billions of dollars, you're going to be okay. That's my view. I'm looking forward. I'm always a,
No,
speculator.
I totally agree with you on that. I mean, again, we're talking about they're looking for safety. So if investors are willing to, put their money in the stock market and risk it, a lot of them are going to go with the big stocks, the guys that may not have, a real negative impact if something breaks out as far as a world war is concerned. But typically, what you see is a flight to safety. So that safety can be bonds, the dollar, and then some of those big ticket stocks that don't really have, aren't affected by a worldwide conflict.
Hey, does this kind of help out with thanks, Carbides? Does this kind of help out with mortgages?
Yeah. So actually, when we got word of the attack, and the markets were closed because it was Monday, it was Indigenous Peoples Day, or what you formerly known as Columbus Day. The markets were closed, and we had taken it on the chin as far as mortgage rates the week prior. But when that happened, I knew when the markets opened on Tuesday, we would see mortgage rates drop a little bit, and they did. And they kind of continued a little bit today. Not a huge deal compared to what happened to them last week. But yeah, again, when you see that flight to safety, we're talking bonds, and we're not just talking U.S. debt. We're also talking mortgage-backed securities because of the fact that it's a safer asset or safer investment for investors as far as between stocks, bonds, and the dollar, commodities.
Right, right. Mortgage-backed securities, and also they're trying to tokenize these mortgage-backed securities over at JP Morgan. I think they're trying to create more liquidity
Yes.
because we all know we're in an issue here, right? China's dumping, Brazil's dumping, everybody's dumping the US treasuries. There's this argument out there. This guy was on TikTok talking about this. I want to hear your thoughts on it. Basically, he was saying inflation is not the issue. We're going to get to inflation right after this because I don't think inflation is the issue for the Fed right now. I think, if they do nothing, they're still tightening. But he was saying, this dude was saying basically, and who knows what he was smoking, but he was, and let me not, hey, I almost got banned on TikTok for saying this guy was smoking crack. This, hey, I said this dude was, let me say it I know the algorithm gets my tone. I was like, are you smoking crack? It's a question, TikTok, okay? But it's because he said that rates were surging yesterday. I'm like, bro, no, the rates are not surging. The opposite is happening. And damn, what was I even talking about? Let me not forget. What the hell am I talking about here? Well, anyways, rates are coming down. Now I forgot what I was talking about. I got too mixed up.
Well,
I,
you were asking like if he was smoking crack because of what he was saying about, and
right.
you were talking about treasuries, China and them dumping
Oh, yeah, yeah,
treasuries.
there we go.
Yeah,
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 so
yeah. I
this
kind of
dude,
figured you were going somewhere with that.
yeah, I was going somewhere. So yeah, this dude was saying basically, in your thoughts on it, that the Fed is actually tightening here to punish. I was like, bro, why would they tighten here to punish other countries because they're dropping our debt?
No.
The dollar, they want to tighten rates to get the dollar up. And I was like, well, what is the outcome here? They're trying to tighten rates to punish people who are dumping debt because the dollar, their debts are denominated in dollar. What is it? Does that even make sense to you, Josh, being a
No,
veteran
I
here?
mean they're dumping debts. because of the dollar. So they're looking at it from a standpoint of, we can't continue to deal with this if the dollar keeps going the way it is. So we need to start offsetting some of our treasuries, to counter the dollar rising. So it's more of an inverse, in that regards. But I mean, that this is something that, I've been talking about for a long time. The U.S. it has some risk when it comes to their treasuries because of who actually holds those notes. And so when you're talking about mortgage or U.S. debt, versus who actually holds that debt, China could, if they wanted to, right, wage a financial war on the United States and unload all of their treasuries, and it would cripple our economy, especially the U.S. Government. The issue is that we are so interconnected. They can't do that without hurting themselves. So at the end of the day, if they're not wanting to get involved in a conflict with us, they're not going to dump treasuries, to hurt us, because it would hurt them just as much. So typically, what you're seeing is that they're balancing, what they have as far as the debt, versus what they have as far as, the U.S. dollar. So
Right.
it's more of just kind of a balancing act for China at this point. Obviously, if China decides they want to go into conflict with us, you'll be able to tell because they'll start with a financial, attack on us, which would be a dump of our treasuries.
Right. It would be a huge dump. I mean, they are dumping, but I mean, yeah, that makes okay. So yeah, and this is an ongoing. It's almost like, is it the chicken or the egg, right? So we'll just stay. I'm like, hey, bro, look, just buy crypto. That's what I told the guy. I was like, so buy crypto. When in doubt, don't buy XRP, bro. Don't buy XRP. Sorry, you XRPers. No, you're screwed. All right, and that kind of brings us to inflation. Let's get into what we just saw. I think there's a lot of mixed a lot of mixed reviews, and tell me what your thoughts are on this. So far we got PPI earlier in the week. This is producer prices. Everybody's like, oh my god, they beat expectations higher than expected. Yeah, they sure did. But I mean, okay, we're at historic levels. Okay, next, right? Not too worried about that. On the PPI front, historically low levels. Headline core, right? Let's go to headline and core. Core is still falling. Okay, it's falling in line, not as fast as people would hope. But who cares how fast it is? If it falls too quick, that means the economy is rolling over also. So you kind of want a slow drip. No, we're not talking about
Yes.
San Francisco on the boardwalks, not that kind of drip. Um, Slow drip here. Headline, okay, is sideways for 2 months in a row. 3.7. Actually, if you go into like the actual decimals, it was
Yeah.
3.69. Okay, no pun intended. It was 3.69. So we're actually falling on headline. And this is, I was optimistic about this because why? Because oil just spiked considerably. And this was from the oil spike. So we're flat with oil spiking. What happens when oil eases a little bit? Well, I mean, that should actually look pretty good there. Okay. So we got that front. We're going to go back to this shelter. Real-time rents are still falling pretty quick. Fed shelter. The excuse was, well, shelter is not falling quick enough. Okay, maybe it's not, but real-time rents are falling. I also heard the Fed was going to start using real-time rents in their data. I don't know when or if. Who knows their motivation, but that is falling. Super core, X housing, so yeah, X housing. I think this is super core is falling. Services X housing is now at 2.6%. So first, Josh, thoughts on PPI? Does it even matter PPI? And I'll go through the slides first. Go through PPI. What are your thoughts on producer prices? And then we'll jump over to this core stuff.
Yeah, I mean, obviously, PPI can have an impact because that's the cost that the producer might be willing to pass on to the consumer, i.e., raising prices. But I think they've already raised their prices, their profit margins. They're looking at this as just extended profits for them because they don't actually have to drop their prices. So this is, I mean, a good sign for inflation because you're not seeing pressure on them to have to raise their prices to us, obviously causing inflation pressures. But again, you got to remember it's going up slower, than what it had previously, but it's not really coming down. And if you're looking at it in this respect, I think this is a great sign, especially like you said, because oil had spiked and it should have caused a little bit more pressure on that. So obviously the producers are seeing a little bit relief. And again, ideally for the U.S. customer, an American, we'd love to see producers start bringing down prices on their goods, so that way we can, afford a little bit more. But this is a good sign that we're not going to see the continued price increases on most of our goods that we see, and I think that's a positive for the economy.
100%, 100%. You heard it from the master there. Core inflation here. Core inflation headline. Guess we're still well falling core headline flat. Do you? I mean, we beat on core. It was at 4.3, so month
Yeah,
over month came down.
yeah, and
Constructive.
I think you and I talked about it a lot, right? What the Fed's done is going to have an impact on inflation. It's just going to take time because these are lagging indicators. They did it so quickly. So I think again, the reason for their policy of hey, we're planning on not bringing rates down next year. A lot of that just has to do with they want to see how much what they've done and how much it affects the inflation for everybody else before they raise rates or cut rates, because obviously they don't want the economy to do a lot of this. They want to see steady growth, they want to continue to stabilize prices, and so they've kind of got to a point where they're seeing that happen. Now it's just a matter of did they go too far, which I think 9 times out of 10 they always go too far, and what that does to the economy.
100%. Shelter price. This is your expertise. We are coming down here, and I actually have something. Look, we're gonna skip the super core because who cares? So it's at 2%, so that's great. But the shelter has been a big issue. They're saying, real rents are falling. I wanted to get from your perspective. Are you seeing mortgage prices? I guess I don't know how to phrase it. Mortgages actually drop in price or slow down, or what are you seeing
I
from
mean,
your end?
I got a ton of stuff on this one, right? Mortgage demand at its lowest it's been in over 30 years. So before I even got into this business, it's the number of applications that we're seeing and people actually wanting to get mortgages to buy houses. Um, eh, as far as the rent's concerned, I really haven't seen that and how it affects the consumer, but it makes sense. And the reason it makes sense is you're seeing turnover, people who are ending leases looking for new rentals. And the only issue I see is, again, there is a housing supply issue. And so if we can't solve that, I think what you're going to end up seeing is that real-time rents kind of flatline here really quickly, and then start again at an incline. But a lot of this data just points to the fact that what they've done is they've lowered the demand for housing with the Fed hikes, and that's what they want to do because they want to see a little bit less spending. But I honestly have not noticed or haven't had anybody tell me, hey, you know what, I'm able to find a rental for a lot less than what I'm paying now.
Hmm.
Typically, what you're seeing is people who are, just ending a 1 year lease a year ago, it was this. And again, they can find the exact same house for the same rent, but you're not seeing rents, being jacked up over and over again. And a lot of that comes from the Airbnb market or the second home market. When people were buying those as short-term rentals, it put a lot of pressure because it decreased the supply of short or long-term rentals. Now, as people are traveling less and using Airbnb less, you're going to see those short-term rentals turn into long-term rentals, which is going to increase the rental supply, which should bring down rental costs, home rental costs. And I think that's what you're seeing a lot of those short-term rentals being converted into long-term rents. So you're seeing a little bit more competition, supply in renting or house for rent. So you're going to see that really start to stabilize and bring those prices down. And again, the demand for buying those has gone to almost a complete stop. So you're not seeing a lot of people trying to buy Airbnbs like they used to. So again, you're seeing, hey, I want to be a first-time home buyer, or this is my first house. I want to purchase a house for me to live in. That's where all of the mortgage demand is coming from. You're not seeing a lot of investor mortgage demand, although you're still seeing quite a few investors purchasing cash some properties, and I've seen quite a few comments and some friend people that I've talked to and helped get pre-approved out there shopping, and they're getting beat out by cash buyers. And I think a lot of people are wondering where this is coming from, and it's being funded by your 401k. BlackRock, State Street, and Vanguard, they're still buying up single family homes to turn into rentals.
Okay. That is, yeah, that's a crazy market because you also have like multifamily. I don't even know how that works versus like people renting out their house, and it seems like there's a lot of the demand for housing builds the new or for new homes. Not there's no pending home, right? Construction, not pending home, but there's no like, okay, let's reconstruct our house to sell it. It's mostly like let's build a new home, but they're building them too big. I think we talked about this last time.
Yep.
So it's like, damn, when does the demand come back? So now looking at inflation, anyways, because of course the market's going higher. You know, year end rally, Santa Claus rally. That's my prediction, and of course I'm 100% right. And I'm just kidding. So this was interesting. The actual shelter inflation all came from lodging away from home hotels. It went from negative 43% to plus 51%. And when we look at the rest of the components, well, I guess this doesn't show all of them. This was the biggest. Oh yeah, it is right here. Household insurance, blah blah blah. So this was the biggest jump. I'm like, what the heck? How did that? Where did we get this from? From July through August, and all of a sudden September we jump. So without this, right? You take away the lodging away from homes. Really, shelter should have been a lot lower.
Much lower. And I think what you're seeing there is the kind of the post-COVID um, people not using hotels and renting out Airbnb. And now that we've kind of moved away from that, when people are traveling and vacationing, they're going back to hotels. So you're seeing an increase in hotel demand versus the Airbnb, which is kind of dropping off the face of the earth.
Right. So do you think this was looking at the I guess the inflation numbers, do you think this was enough to get the Fed to hike in November? I have a couple theories on it. Do you think, because I know we're going back and forth, it's like usually you can guess, but now it's like more data. Okay, does the Fed hike in November given the data we've seen so far? Do you think they hike? Do they hold?
You know what? I bet they hold. And the reason I think they hold is because they're going to probably look towards doing it later on if they do it at all, because they want to see that Santa Claus rally. They want to see how much of a rally that is before they make a decision to curb the economy any more than they already have. Because if the Santa Claus rally isn't great, it's not, we don't see a huge push, then they know that they've done the job, and that pressure on inflation because of consumer spending has been tightened enough that people aren't going to go pressure that a little bit higher.
Hey, you heard it. I didn't say it. Santa Claus rally. No, I agree. I actually was thinking possibly we get the Fed pause here to see how much inflation might come back, because now we're seeing that oil. I mean, the and I'm gonna get your thoughts on that. We're seeing that oil is imminently death, to the markets as we
Right?
thought.
It's not going up to $150 a barrel. It's coming back down.
It's coming back down. So, and that's why I think headline really rolls over from here. There was a chart that I had yesterday that showed all the increases in over the last 3 months from oil and CPI increase. Now we have a big drop. Now, hey, it could go back up, but I think we're set for CPI to pretty much roll over. And what I'm thinking is the Fed is like, okay, we saw, I think food away from home was up a little bit. There were like small increases in consumption, not
Yeah,
nothing
food away from
big.
home was crazy.
It was, yeah, it was crazy. Well, the one that I saw, I mean, I don't know, I saw a couple of them, but either way, going into where we're at now, it's like, dang, people are still increasing that. They're still spending on the credit card debts going up, blah blah. And I think it continues till January. But point being here, maybe they they do another hike in December because they know a lot of spending is going to come in. They're like,
Yep.
okay, let's let markets run up all
And
time highs.
it'll be justified for them. They can be like, look, this is what we saw. We had to do this because we didn't curb the spending like we had hoped, and so this is our cue to kick in one more hike. And that's why I totally agree with you on that one.
100%. Yeah, that's what I'm thinking. So I think we roll over going into maybe January, February. Guys, the market is oversold still. I know there's some geopolitical risk, but unless it starts to escalate, I'm not sure that we really it really gets too bad here. I mean, honestly, if it does escalate, you might get yields come down much further. And yes, the dollar will go up, so it crushes those sucky stocks, right? Premium stocks go up because yields are down, but maybe they hike. Now, the next part, these what is his name? The Saudi prince came out and said basically that they would help control the oil markets or keep the oil markets from getting too crazy. And that's what I'm guessing caused the crash in oil initially. And he also said that he's talking with Russia, and Russia would cooperate with keeping markets stable for now. Now we're getting to real geopolitical, you know, risk here, or and offer it. Well, I don't know what's going on, but a lot of manipulation here. So, do you think that this, because they're supposed to be cutting production going into the fourth quarter, do you think that the Saudi, now that we have the war in the Middle East, that these the Saudi prince and Russia, do you think that they will try to get something from the US by keeping oil kind of capped here? Or what do you think your thoughts are? This goes all the way into the Middle Eastern conflict, but what are your thoughts on Saudi doing that and the oil price coming down? Is it sustainable? Does it go back up? Are we level?
Yeah, I mean, but the caveat to that is it's sustainable if a larger conflict does not break out. But if you see a larger conflict break out, there's been several countries that have already come out and said if the U.S. gets involved, you may see an oil embargo again, kind of like the 70s. So again, the issue that we run into is that geopolitical conflicts here could have a major impact on the future of oil, simply because of the fact that if enough countries band together and try to hurt the U.S. through oil, they can. So that's the big caveat to all of this: is are we going to see a conflict escalate, bringing in other countries and using some of their pressures that they have financially on the U.S. and therefore affecting the price of oil? Obviously, Saudi Arabia does not get involved in that regards, and they are willing to increase production to offset that, which I mean they have the capability of doing. I think you could see, that work. But again, you're counting on Russia and their word. That doesn't necessarily hold much weight. But obviously, the relationship with Saudi Arabia and Israel and the U.S. is strong right now. But anything could set that off. So I think if Saudi Arabia sticks to their guns and they're willing to do what's needed to keep the price from going up too much, they can do that, and they will, and that will keep the oil from escalating or getting higher.
Oh, lost him for a second there. See if we get him back. While he tries to get back, Asan, I don't know if he knows. Yeah, he probably knows. What the heck? That's weird.
Sorry
There
about
you go.
that.
No,
I
you're
had
good.
a call come in.
No, you're straight. Go ahead.
Oh, so like I said, one of the things is that Saudi Arabia can control the price pretty well with what they have as far as production is concerned. But if the conflict escalates and something goes awry and we lose that relationship with Saudi Arabia, there's a big issue with oil and what it does to the price. Look at the 1970s and the oil embargo when we backed Israel last time. So there is some risk there.
Right. And that kind of answers, Asan, you were asking what was the reason for today's dump. Number one, NASDAQ was already oversold, and I think NASDAQ is carrying the market. And this is going to get into, so look, we're right at the top of the trend. So we've been up for like 3 or 4 days. Excuse me. So we're at the
Bless you.
top of the trend. Thank you. We're at the top of the trend for one. We came back, but the dollar is pushing up, and we just talked about this earlier. You're getting the dollar come back to that 105.50, and it did support at that big monster level. So you do get dollar flows. You're getting dollar flows come in along with TLT. Well, you can't. It doesn't look like it here, but rates are starting to peak here. And the theory we're talking about, or the thesis, is basically, well, now that Lebanon is, well, not Lebanon, but southern Lebanon, or Hezbollah, right, is coming in attacking the North Israel. Well, the fear of this war expanding is starting to lift. So you're getting bids into the U.S. Treasury market to some degree, and the dollar go up. So I think it is a flight to safety in dollar and bonds, maybe more dollars. I mean, I don't know, but flight to safety is what it is starting to look like here. And so we got to focus. We do got to keep focused on here. What this might help the mortgage market to some degree. Big stocks, the market's going to diverge a little bit, but for the most part, if okay, we think Iran's involved. I know people. Oh my God, they are. Of course they are. Well, you know, I think they are. Of course, right? We
It's
think they're
theory.
involved. It's still theory, fact, fiction, whatever. There's a lot of AI out. And guys, be careful. We have AI now. You're gonna see so many fake videos. Question everything. Make sure you question everything. Everything you see is not going to be fact.
Some
Uh,
serious deep fakes.
Serious deep fakes, and they might be in favor of what you believe too. But just make sure you track that. So, what's the big risk to the market here? I'm gonna say that it is, and Josh, let me know what you think on this, that the market does expand here. We want Saudi Arabia on our side, of course, but because they are part of the, man, what are they? They're I guess because they're all Arabs, there's going to be that bid to get Saudi Arabia to hate Israel, which I don't think they're dumb enough to do that because it's all about money at the end of the day. So I'm thinking you have three nations. You have Jordan, you have Lebanon, and where's Lebanon? Are they completely like has these jihadists? What the heck? There's so many names here. Has these jihadists taken over all of Lebanon? Are they controlling Lebanon?
No, it's a faction within Lebanon.
Okay,
They don't control the government like Hamas does
Gaza.
in Gaza.
Right. Okay. Okay, so you got that, and then you have Syria. I don't know what Syria is up there too, southern Syria. So you got Lebanon, Syria, and I'm thinking they're the Hezbollah or the Hamas are kind of surrounding Israel to some degree, and Saudi Arabia needs to make a deal maybe with Jordan, or we do with Jordan and Syria, to say, hey, you want to get them on the other side. I don't even know, but that's the risk here, is that it does escalate. And now we have Qatar has the funds, right? Qatar has the funds that Biden, because that's the other part. Did Biden send the money? This was interesting. I just want to square this out. Biden sent unlock some money for what, for some prisoners or something like that from
We
for
had
you.
we had we had $6 billion in frozen assets from Iran, and in the trade, we unfroze that money. The money was still being held in a Qatari account, and so when we released the funds, the money was still in the Qatari account. And according to the administration, Iran would have to request a withdrawal and document or prove what those funds were being used for, because obviously those funds were restricted to only humanitarian assets. The only issue is that just like economics and budget and accounting, we all understand that if $6 billion is frozen, um, when it becomes unfrozen, yes, it can only be used for a certain amount of money, but that frees up other assets that the country may have that they can reallocate for what they really want to use those funds for.
Okay, there you go. So yeah, it's tricky. It is tricky. That's why I say you got to think this through, right? This is why we have Josh here, because I don't understand this stuff to the most degree. I'm just taking guesses psychologically. I'm like, okay, who's trying to gain here? We also heard that Egypt. Well, we're not going to get all into that, but Egypt or some intelligence already warned Israel that there would be attack to some degree, and who knows what they're trying to do. But for the most part, Saudi Arabia is what we need to build the concessions for the Arab nations to say, hey, we gotta stomp on this. Does it expand? Now, what are your thoughts, Josh? Do you think this drags on? Because first it's supposed to be quick and swift. I know they're coming into the north right now, right? They're trying to get them evacuated. Do you think this is quick and swift, or do you think it drags on another 6 months like the Ukraine-Russian war?
If it is restricted simply to Hamas, Gaza, and Israel, it's a quick end because I mean, literally, Israel could level Gaza overnight if they chose to. But if it escalates and we see other factions within Arab nations decide to join in, it could get extended out. And again, escalation is always a problem when it comes to conflicts because any sort of escalation could drag this out a lot further. But if it stays where it's at and it's strictly Hamas that Israel has to deal with. I think it's a pretty quick, as far as a major war is concerned or major conflict is concerned. Obviously, the attacks will continue even after it's all said and done, because you read the Hamas charter, and their sole intent as far as their relationship with Israel is to unalive them. So Hamas will continue to attack Israel, but at what scale? Not the same scale that we saw. Israel's just trying to quell that so that they can and move forward.
Okay. All right, that makes sense. Yeah, this is gonna get tricky. I'm gonna definitely keep up with you since you are more privy to that information. Now, switching back to the markets, the consumer, we're heading to the fourth quarter. I did get we did see a chart the other day. It was revised up. I'm trying to find it. Where is it? It is consumer. There it is. It's consumers actually, the whole consumer savings running out. It was
Yeah,
actually consumers revised up another they
yeah,
revised up another trillion
yeah. They said that
extra
they were
savings.
wrong about their estimate on the amount of funds that people had, so people's savings accounts didn't get dried up when they thought it would.
Yeah, exactly, exactly. So, does that eliminate, because where I stand, I think there's a possibility we don't really see a wide scale recession at all, not even next year because of the election, because of reasons. I know you're a little more bearish. You see, you hear the sentiment where you're at. And of course, there's things that are weak here, but what are your thoughts on this? What can we, I mean, you get revisions down, now you're getting revisions up. Have you thought this through? Like, what does this mean for the recession as far as people having more excess savings? Do you think they run out January or what?
Yeah, I mean this was good news in my opinion, at least from my perspective, for the economy and the U.S. Consumer. Obviously, savings runs out, then they're only limited to what their credit is available to keep the spending, which would have probably helped with inflation a lot sooner. So I think as long as the U.S. consumer can adjust and budget through this, and not eat up that savings, you could see, the markets not go into a recession. However, at the end of the day, it's quite apparent that consumer spending is not being curbed too much.
Mhm.
And I think what you're going to see is that savings account, that those savings numbers start to dwindle again, and we see a new revision. Hey, by this date, you're going to see the U.S. consumer savings is completely wiped out. When, I don't know. Again, it's all speculation, right? But at the end of the day, the consumer is feeling the cost of things, and prices aren't coming down. The only way we can, salvage this and not put ourselves in a situation where savings is completely gone is if we see some wage growth, which then causes wage inflation. So it's a slippery slope, but I am optimistic that the U.S. consumer can navigate this, but I still think the economy is going to feel the effects of the Fed funds rate in next year, and we will see a recession just because of the fact that what they've done was attempt to cause one, and not necessarily crash the market, but they need to stop consumer spending to a point where we don't see inflation continue to rise as quickly as it was.
Right, 100%. Employment, it sounds like employment to you again. We got to look at
Oh
employment.
Lord, yeah,
Right.
I don't know about that, man. You know how many part-time jobs were created in this damn thing? I'm still blown away that that they spend that number like, hey, it's a great number. Yeah, but how many of those were part-time jobs? Are these?
All of
I,
them.
yeah, right. And the other part about it is that from what I'm seeing and hearing, most U.S. consumers are working 2 to 3 jobs just to live paycheck to paycheck at this point. So yeah, you got a bunch of people going out and getting a part-time job on top of their already part-time job or full-time job just to make ends meet. So this isn't good news for the economy. It just means that people are having to work more just to survive.
Right. Oh, here it is. I found it. It's the full-time, part-time. Yeah, real quick, revisions are the new QE, whether up or down, right, for the
That's
market.
not funny though, man. Come on, that's
Yeah,
hard, but yeah,
I
it's
know.
pretty
Well,
funny.
the economy never helps the real economy. It just helps speculators at the end of the day because the real
Yeah.
economy, it's not like you could fake somebody giving somebody a job. Like it is what it
No.
is. So that's a lesson. Hey, make sure you guys are investing when you're young. If you're old, sorry, you're screwed. You're gonna have to call Josh and figure out. But no, really, you got to stay invested because you can't trust anybody over time. That's my pitch anyway. $400 a month, 10,000, whatever. Anyways, yeah. So jobs were, the payrolls were revised up. The market bounced on that Friday, and we said, hey, look, we could bounce here. I think it was more technical, and people are offsides. But for the most part, I think this again could be a reason the Fed does hike again in December or possibly January. Who knows? And what I want to take us to is this is the reason why that's probably going to fall off a cliff because they're all seasonal. I call this seasonality, right? It's Santa
Yeah.
Claus rally. Seasonally, the stocks move higher in October through December, and you get seasonal part-time jobs because UPS, right? Amazon, what is it? The Black Monday or not Black Monday?
Black
I don't know.
Friday.
There you
Black
go. Yeah,
Friday. Yeah.
there you go. So everybody rushing
Retail.
retail. There you go. So you get the retail boom, but it's going to be short-lived. But the part-time jobs are up and full-time jobs are down. So again, I am not bullish forever, guys. I'm saying, hey, I think we're gonna have one more, consumer spike here. So that's what Josh was talking about earlier. Is there's actually a lot more part-time jobs. Now, getting to the wage inflation you talked about, uh, I think this was average hourly earnings. We can look at wage growth too. I'll pull that up, but average hourly earnings started. This is why I think the market was actually more bullish. Was that average hourly earnings, even though the jobs are up, are still trickling down, and you put this together with, damn, do I have it on here? Oh, we'll just talk from here. It was productivity was picking up,
Yeah.
production is picking up, and this is where I think that it's possible. I don't know how this hits the economy. I know for the stock market, it's like, okay, the productivity picks up where, per hour worked, you're producing more goods and services. That's good because it eats away at inflation to some degree.
Yeah.
What are your thoughts for the economy or for the mortgage market? I guess it'd have to be more specific, but if productivity starts to pick up in a meaningful way, does that help us from going into, unemployment spiking in the future?
Yes and no. I was actually having a deep conversation with somebody yesterday, and we were talking about it. As the consumer or as workers look for more money and ask for increased wages, you start to see those businesses as they're getting federal money for investing in manufacturing and those kinds of investments, they're going to use those funds to bring in technology. And that technology is going to create increased productivity, but it will also have an effect on the number of people they need to hire or have on the workforce so that they
Mhm.
can drive down their costs to manufacture. So there's a double-edged sword here. And I think what you're going to see is with the infrastructure investing that the government's doing, a lot of these companies and these manufacturing jobs are going to be pushing towards technology, which will bring down the cost. So increase production, but bring down the cost. And unfortunately, if they get to the point where AI and automation increases tenfold because of AI, you could see some job loss.
Right. Now that does make sense. So what we should be seeing here is even though productivity picks up, good for the economy to some degree, good for companies, the big dogs, the rich get richer, the poor get poorer. Oh, question for Josh. We'll get to that. But this is what we're staring at, folks. When is this going to spike? It is backwards looking. So we do want to look at initial jobless claims, even though, hey, revisions are the new, QE, QT. So who knows if those initial claims are going to be very accurate. So this is unemployment rate. That's what we're looking at. But also the initial claims, I think that's where investors, and you tell me if this if this is data we can really trust. Is this the best data we could trust to unemployment spiking? And then carbides, we're going to get your guys' comments there.
Yeah, I mean, it's the best that we get. And at the end of the day, all of this is just based off of data, and the data points to certain things. But I think, again, you got to remember what happens when they revise it lower? What happens when they increase unemployment because they missed the number incorrectly? It's all kind of guesswork. So it's more of just kind of an indicator of where the economy's heading. If you see unemployment start to spike, that means that the unemployment's probably going to rise because it's going to start that way. So I think instead of looking at it as a, unemployment's, low, again, we talked about this. Unemployment's low because especially when they do the survey, people aren't going to say they're unemployed if they're working DoorDash, Uber, Lyft, and they've got those jobs that aren't necessarily being reported in the hard data to the U.S. government because they are employed, but they're not on the grand scheme of things.
Okay, that makes sense. It's a weird situation where I guess you just watch prices and we got to let this play out for what it is. Before we get to yours, carbides, really quick, because that's Josh is going to be able to answer that. We have a battle here on the TikTok. Some people say oil's going to 120. Josh, is oil going to 120 in your view? What's the probability of that?
Oh, again, the probability is going to be based on if the conflict escalates and brings in other countries. But if we can maintain the relationship with Saudi Arabia and Russia stick to their statements, oil is not going to go over 100. But if something changes that, which it can, right? Again,
Right.
there's always those wild cards. If something changes that, then easily. I mean, if this escalates and more Arab countries get involved in this conflict, they will treat this very similar to the 70s and when we had the oil embargo. So I think that's something to be very cognizant of and
Right.
really keep an eye on the geopolitical side of things because I mean, at the end of the day, they're all interconnected.
Right. So you need a black swan event, Dima Yush. We think the probability would be up there if you get a black swan event or something escalates. But on its own, you're saying manufacturing is going to fall apart. It seems like you're flagging weakness in the economy. Why would oil spike if supply is coming more online? That makes no sense, which is why I told you yesterday you're on, you know what, almost got banned. I think you're right though that a lot of stocks are going to get crushed and you could wait to buy them. But again, you need a black swan event for that, in my view. And yeah, you're probably right. Don't buy those trash stocks; they're going lower. But I really, I guess we'll do a bet here. I bet you Meta, Apple, Amazon, Google, the Magnificent Seven still go up because they don't care about oil. They're gaining market share. I mean, we're gonna go over that later, but they are premium stocks and they can do financial engineering. They can buy back their own stocks. They're going to benefit from fiscal policy. AMD is about to break out because they don't care about consumers. It's all about the chips. So you need black swan events for that to happen. Back to Josh over here. We've got a questions from Mr. Carbides. Question for Josh: how do home prices react to extended periods of higher rates, and when do we see home prices rise after a cut in interest rates?
It's a great question. I mean, obviously, there's no crystal ball and how it all works, but it's kind of funny because it's not intuitive. A lot of people assume when interest rates go up, prices come down. When interest rates go down, prices go up. That's not actually how it's worked out in the past. Historically speaking, interest rates go up, home prices haven't come down. They've either flatlined. I think a lot of people look at 2008 and the big crash, and they assume or they think about it in the respects that they think interest rates spiked, but they really didn't. Interest rates were kind of level through that whole thing. They had to come down so that they could spur people back into buying homes, and that was the Fed policy. So, an extended amount of higher rates will have a huge drag on the housing market. You could see prices come down a little bit more than what they already have. But at the end of the day, the interest rates aren't going to be what drives this. It's going to be the supply. We've already seen demand hit all time lows as far as mortgages and trying to buy homes, and we have not seen prices crash. That's if we had a normal supply of homes, you would have seen prices start dropping drastically with where interest rates are. However, because there's not a huge supply of homes and we have a housing shortage, whether you want to believe it or not, we're seeing prices kind of drop a little bit because they have just the median prices dropped like 10, 15%, 20%. But again, that's more so just because of demand and the normal work of supply coming onto the market. You have golden handcuffs. There's a lot of people who, basically 95% of the people who owned a home or bought a home prior to 2021, 22, they're in a situation where they have a mortgage payment that's way lower than what they could rent for. And they're not going to sell and move up or move down because of interest rates and the cost of homes. So you've got a lot of people who own homes right now that just aren't moving. So they're not going to sell their homes. So you're not going to see a flood of inventory coming from people, selling. You're not going to see a large flood of inventory for housing from builders because they're slowing down to almost a halt right now. Um, the only way we see prices really come down is an influx of supply, which, in my opinion, only comes from a huge economic downturn. If the economy crashes and people start losing their jobs and they can't afford their mortgages, they're going to have to sell, which is going to increase the supply. And obviously, demand will be down again because you have people who can't afford it because they lost their job. So at the end of the day, home prices kind of they stay up. I mean, they're not coming and crashing down unless something major happens in the economy. Um, and then home prices rise after our outage. So home prices, that's funny because there's a lot of people on TikTok and social media saying when interest rates go down, home prices are going to start skyrocketing again. I don't necessarily think that that's true.
Wait, let me
It
guess. Let me guess, Josh. Okay, let me test me here. If rates come down, home builders are incentivized to start building more supply.
So you got home builders are more incentivized to build. Plus, you have those people with the golden handcuffs more apt to make a move and sell their home to buy another one, increasing supply because they can actually look and afford that mortgage that they would get if they bought a new house. So yes, they would be trading for a higher interest rate, especially if it's in the fives or sixes. But again, there's going to be more people with an appetite to move. So you will see more sellers. So existing homes will increase, and they will go to move, which will increase supply. And at the end of the day, demand is still anemic because it's almost unaffordable to buy a house with house prices. So I think what you see is interest rates come down and home prices continue to rise. I don't see them spiking, but I think that is what keeps the housing market from crashing. Is if the Fed does make a decision to pivot and drop interest rates, it could help with demand as well as supply.
Okay, so let's get that straight, square it up there. Dang, that's a great see, that's what we need to hear there. More lower rates could actually, and I read this in an article, lower rates could actually lower home
Lower
prices from what I
prices.
heard, because
Yep.
there would be more supply coming online from home builders and then more supply from what would you
Existing
use
homeowners. Existing
existing
homeowners.
homeowners. There you go.
Mhm.
Existing homeowners, they're gonna get excited. Okay, let's go to Florida. We've been trying to get the good weather. Let's go to California. And so that's actually counter. I love it. I love it. People say the craziest stuff like, "Oh,
Uh,
this is what's gonna happen," without knowing the under. That's what we got,
Date
Josh.
the rate. Well, yeah. I mean, the one old adage that I cringed every time I heard it. Date the rate, marry the house. And that's basically just assuming that you're going to be able to refinance in 12 months to 24 months after you bought a house. There's no guarantee that rates are going to come back down to where they were or anywhere near where they were going to. So buying a house in the hopes or in the thought that, hey, I'm going to refinance this in 12 months is just a terrible idea because it sets you up for a disaster. So I think at the end of the day, it's everything's an economy, right? Supply and demand. So if rates come down, we're going to see an increase in supply. We'll see an increase in demand. They'll meet each other in the middle. It'll be very, copacetic. But at the end of the day, really the housing crash is going to have to be caused by a major economic downturn. This isn't 2008 where the housing market leads us into an economic downturn. It's the normal market where an economic downturn leads us into a housing crash.
Now, demand and supply and demand dynamics are always with the go-to, right? When you're like, okay, we're a little uncertain here. And is it that? And I'm just throwing stuff out there so you can answer me. I know these are in people's heads. Yes, if rates come down, supply goes up, demand also goes up. But wouldn't we kind of guess here, or try to think that supply goes up more because there's demand right now? There's supply. You're going to see supply go up from the builders and from the existing
Existing
homeowners.
homeowners.
but demand only moves up for uh I guess new homeowners on
you're
the
you're
demand side.
you're you're missing the existing homeowners. Typically, an existing homeowner is not going to sell and rent. They're going to sell and buy. So they kind of go hand in hand. When the existing homeowner puts their house on the market, typically they're not selling their home to go rent. Typically, they're selling their home to go buy another property. And so they will kind of counter their own supply. So typically what you're seeing an increase in demand from people who don't currently own, but also an increase in demand from the existing homeowners as they trade up or trade down on their home.
But wouldn't prices not move then? You see what I'm getting at? I'm getting
That's
at
what I'm
where
trying to say. Like, I don't think you're not going to see home prices, skyrocket when rates come down. But you will see prices probably stabilize or get better, like a normal market, because of interest rates coming down.
okay, so sort of regionally up and down here and there, nothing extravagant on either way, up or down. Okay, that makes sense. So, but it does bring up economic activity because now people. Okay, good. So the Fed, come on, Fed, what are you guys doing? Oh, shelter inflation or inflation in general. Maybe it comes down to see, and this is when I think about that, I'm thinking I don't see maybe they could they really have recession by the balls here because if they do drop rates, economic activity picks up. Um, Plus you got fiscal coming in because again we're thinking about next year what happens. I really think there's going to be a drop in spending from the consumer. January, February, the Fed might hike. It might get dangerous, and then all of a sudden the Fed reverses on it, or maybe the White House comes in and prints more stimulus, and there's a bump there. There might be like a period of maybe 1, 2, or 3 months where there's a lot of weakness. Does it get us to negative GDP all of a sudden? I don't think so, especially if the war does ramp up. Here comes more manufacturing for weapons. So maybe the jobs move. And I was going to ask you that too. I know I'm ranting here. I'm just trying to get my thoughts out because I don't think in organized manner. What was I going to say? Oh, if there's so many jobs, there's still a lot of jobs available, right? So if people do, let's say the AI and productivity picks up, well, those people, there's still a lot of jobs available to be filled. Or does it become a demographic issue where it's like, yeah, there's jobs to be filled, but there's not necessarily the skill to fill those jobs. I heard that argument too. Is that
That's
is that
that's a huge problem, is the skilled labor force for those jobs. Typically, what you see is there.
he probably got a call again. I'm gonna get to you, TikTok guys. Um, Demi Yush, what'd you say? Oh, which hedge? All right, yeah, Demi Yush, we'll get to it, bro. And I love your negative commentary. Also, not negative, but I love your pushback. I love it. Gotta have the pushback. He'll come back on. So let me go through Demi Yush really quick. Iran embargo not possible with oil. I'm slowly selling my CVX. I don't really like energy either. Government will tax and litigate Magnificent out of their cash. Well, that's a I mean, that's a guess there. I don't think. I don't think that the government's going to tax because I have a thesis on the Magnificent Seven. If we run the stocks, right? Uh, First, you have here's my and I posted this on Twitter, but here's kind of the thesis here. The Magnificent Seven. I know you, Demi Yush, you're short. You're not long equities. You're pissed. You don't want equities to go higher on the Magnificent Seven because you're not going to own them. So you're like, hell no. I need to make an argument, a bias up to get those stocks lower. Well, the market doesn't care about your bias, right? So they're going to tax them all of a sudden. It depends who's in the White House. It depends how politics go coming into next year. Also, you got to think of the premium stocks. They're still growing revenue. So the existing fund managers, fund managers that we have today, do you think they're gonna buy more, sell more? They're gonna buy more, right? They're offsides. They're already not in Amazon, Apple, Google, Facebook, Tesla, whatever. They're gonna buy more. So there's no way that those big stocks dump because they're already locked into low rates. I'm just making the argument against the Magnificent Seven really crashing materially. They already crashed. Nasdaq was down 38% in 2022. They priced in a recession here. So share buybacks, bro. If they buy back shares, if they do buy back shares, let's see, is he connected yet? Uh, Not yet. If they do buy back shares, well, that makes the shares go lower. They can invest in their cash in the money market funds. which is literally. Oh, what the heck? Hold on. See, we got an echo. Is that me? Check 1 2. You're good. Yeah, something happened with the. I don't know. We got an echo somehow. Um, we'll try to figure it out. But anyways, yeah. So they should be good. Plus the fiscal policy, bro, coming in for the Mag 7. Maybe not all of them exactly, but Inflation Reduction Act, Infrastructure Bill, CHIPS Act. I don't see it happening. The retailers are going to get crushed. The banks, the small regional banks, are probably going to get crushed. You saw today, J.P. Morgan, Wells Fargo, Citibank. They all beat top bottom line revenue and they increased their guidance. I mean, bro, they're not going anywhere anytime soon. I still think we have an economic checks and balances. Short 6M recession. I want my daughter to afford a home. Yeah, so I'm saying we want prices to come down, but you always have a pushback on the other side, which is prices uh are going to come down if the right environment starts to hit. More in 3 months than stagnant. Thank you, Demiush, appreciate it. What are the hedges to buy? Plus most are holding their rates. Honestly, Fed just needs to go silent. They're going to pause here. Probably too many jobs to fill, not enough people. So inflation, wages. I think it's bluish collar dip. I think white collar plummet will pump. Yeah, mute and unmute. Oh, that's what that was. Mute and unmute. I tried it. Carbides. I like the response the markets are made by sellers and buyers, and the housing market is no different. Sometimes the best time to buy is when it feels like you shouldn't, right? Yep. Sorted the same as always. Okay, there we go. See if we're back. Are we back online?
Hey, what's up, brother? Yeah, sorry, technical issues.
No, you're good, bro. That we already know how it is. I mean, hey, we don't have the tech nerds here, my brother, to fix that. Hey, you know what? Streaming is difficult. It's not even. It's a whole media is a whole nother business here. Like I didn't
It
realize
is.
you can increase the sound quality, the visuals, the cameras. I'm like, bro, this is crazy. No wonder Hollywood makes so much money. And
Yeah.
oh, did you see by the way, let's throw this out here, that now the most watched videos, I don't know how to frame this correctly, but the most watched videos by teenagers or media is now YouTube, no longer Netflix or whatever else it was. So Netflix is losing market share
They've been losing
to
market share
YouTube.
for a while, bro.
They've been losing it for a while, but now YouTube is climbing.
Yeah.
So and now Netflix is supposed to open up some commercial real estate buildings. Have you seen this where they serve drinks and people go hang out? I'm like, bro, I don't know.
They're shooting at stuff that I don't. It's not going to work.
Yeah, it's not going to work. That's why they're not a Mag 7, because they could be taken over. Apple's doing it. Obviously Amazon Prime is there. You have to be strong in the niche. So Demiush, this guy really wants to buy the Mag 7 here. And so he's hoping for the market to crash. He wants prices to go lower. But you just heard what Josh said about the housing market. It's not a 50-50 thing. It's not a 90-10 thing. You have to have the right conditions for prices to come down. And remember, if they do come down, that's going to hurt certain people. It's not a moral argument, but it'll hurt certain people and help others. So yeah, you want the best scenario for yourself. The thing is, not everybody has the same scenario. You just take advantage when you see it, right? It's like you got to swing at the fat pitch. You got to swing when the pitch is there, and you have to know what the pitch looks like. And that's what Josh has kind of explained to us. What does the pitch look like? Carbide said basically the housing market is the best time to buy sometimes when you feel like you shouldn't. What would you say is the best time to buy for a new home buyer? Or not a new home, but yeah, I guess a new home buyer, right? Somebody who's starting to start a family. What would be should they go in an apartment today and wait a little bit for the Fed to cut rates? Should they just jump in, or does it literally depend on their specific situation?
See, and that's you're right. You see the people say, "Hey, it's always a great time to buy," or "Right now is a great time to buy." It actually depends on your own personal financial situation.
Okay.
If you're in a good spot with your job and you're making good money and you can qualify for a mortgage that fits your financial needs, that's within your budget, do it. If buying a house is going to stretch you thin because you're having to buy a $700,000 house when you should be buying a $400,000 house or $300,000 house. Now's not the time to buy. So it really just comes down to each and every individual person's financial situation. So there's not really a right time to buy, because typically when you're trying to buy a crash, there's a lot of other things happening that may make it so you can't buy a house when it crashes. Because when you need to borrow money, you can't. And when you can borrow money, you don't need to. So I think it becomes a matter of, if you are confident in your financial situation, your job, being able to continue to bring in the money that you need, and you can find a house that is within your budget, then now's a great time to buy. But if, like I said, if you're having to stretch yourself, and do crazy things to be able to qualify to buy a house, and you're not sure about your job, it's never a good time.
Okay. Um, you heard it. You heard it from Josh. That's why you got to call him if you're trying to buy a house. Get hold of Josh. We'll have his info in the show notes. All right. So back kind of to the Fed here with inflation. I think we agree inflation is coming down. For the Fed, anyways. They
Yeah,
probably pause here in November. Maybe they hike again in December, depending on how much the holiday spree, ramps up spending.
data
Probably
driven.
data driven. There you go, data driven. Um, Now the Fed, how do you see them really screwing up to where unemployment does start to spike here? Where do you see them screwing up in 2024? Would it be or the quick hike and cut, right? Do you think they hike and then cut? I think that's kind of what they want. I'm assuming because they want to cut rates, right? They did mention on, I think a couple days ago, who was it that was speaking? Somebody was speaking and they said we're more likely. Who the hell was it? It wasn't Powell. They basically said we're more likely to keep the Fed balance sheet shaving off, so pulling liquidity out and cut rates. We're more likely to cut rates and keep liquidity draining, and I
Yep.
was like, "Hey, maybe that's a telltale."
Yeah, I mean, I don't think we see QE, in the traditional sense like we did in the past, because of their balance sheet. But yeah, I think before they were to do any sort of quantitative easing, they would be cutting rates. I think if they implement quantitative easing, then we're in for some trouble.
Yeah, very true. I wanted to throw up or see what the Fed funds actually looks like versus
The
QE. See what this looks like in the past. So so that does make sense then, huh? Right? Cutting rates first.
And honestly, that's what they used to do. They didn't do quantitative easing. A lot of it was just rate hikes and rate cuts. They implemented quantitative easing because they needed to spur the economy a little bit more. So it was just an added tool, but it's not their primary tool. Their primary tool is the Fed funds rate. So that's what they're going to use to try to, kind of manipulate the market and get it where they want to get it.
Right. Yeah, and that is the key. That's another reason why I don't think markets fail. It's more of a it's not a traditional view, but it's like, hey, here in wait, let's get rid of that. You got the in blue, this light blue is liquidity, that's QE basically. And then you have the Fed funds rate. Let's go back to the month. And then you have the Fed funds rate here. That doesn't look right. Oh, it's because it's on SP. I know why. Let's go here. All right. So traditionally, this is what they use to control the market. We just started getting QE. Really, they didn't really do much until '08. '08 is when
Yep.
they really turned it on.
Yeah.
So if there is a financial crash, because again, for people to think about this, 2020 was the biggest collapse of all time, I believe, in the global market. Everything fell off a cliff, but the recession was well, I don't know if it was 2 months. I call it 2 months for the stock market because it
It was
came right
short
back
lived
up.
for sure. Yeah.
It was short-lived. So even if anything happens, they're saying we're going to keep pulling this down. Let's see, what did they do
Hmm.
in from 2014? This was a geopolitical issue, right? In 14, 15, was it oil, something to do with
Yeah.
oil and Russia? Russia invaded Crimea, I believe.
Hmm.
And then was there an energy issue
Uh,
also?
I think so. I think I recall that there was some energy costs increasing around that time.
Something happened. I remember the China or looking back, there was the Chinese stock market crash. So they kept thing sideways. They never really drained it, and I'm thinking this was 2016. So the market was still moving higher. I don't know exactly. I never tracked the economy because I'm always looking at the stock market, but the stock market went higher because of tax cuts, promised tax cuts, going into the next year. So I'm wondering if that could be in play here. But for the most part, they increased rates and the market was fine, and you had the fiscal liquidity coming in. You had tax cuts, which didn't really hit right away. It was a promise, but the market liked it. And you had the Fed balance sheet kind of buzzing sideways. So I guess they've never prolonged a drain. I guess the longest they went was from 18 to 19, 1 year. We already, I mean, we're already 1 year in the drain. So how long can they actually drain? Maybe they keep draining it. I don't think they can. I think they're going to have to.
I
I
don't think
hear,
they can either, but I think their
yeah.
goal is to drain as much of the QE as they can because they don't want that. I mean, like I said, this was a fairly new tool that they started using. So I think a lot of this is they're hoping that they can stabilize the markets, bring down inflation without having to really do more QE and really start to bring the balance sheet down for them and lower their quantitative easing to a point where maybe they're not doing any at all. But I agree, there's no way they're going to be able to unload that balance sheet completely or in any significant way because a lot of that money is what's propped up this economy as long as it has.
Right, and especially the mortgage-backed securities. I know they're probably gonna have to start buying those back. Money market funds have a lot of cash. So yeah, maybe they do cut rates first, or they keep rates, sideways for a while. I'm thinking the earliest. Oh, what is your thoughts on that? What is the earliest that they can cut rates? That they will cut rates if you just had to take a guess going into next year. I know the market's like pricing in not till, or they're saying we're not going to cut till end of 2024. Do you think they do it beforehand, or will this, political, this fiscal policy keep coming online where consumers drop off in February, March, and the Biden administration is like, well, emergency credit card recovery programs, something like
Yeah.
that.
Ask yourself this, right? Um, they're supposed to be non-political, but you have an election coming up. So I would actually think maybe the second quarter of next year, if the economy is not doing well, they're going to have to do something to spur the economy so that it looks good for the election cycle. So I wouldn't be shocked if we saw it second quarter next year.
Okay, that makes sense exactly because the shadow QE reverse repo facility, this is due to and let's try to show it here. This is supposed to run out, guys. This is going up, but actually let's invert it so we can actually look at it the right way. This is due to actually, what the heck? Anyways, it's due to run out by 2024. It's draining pretty quickly. Is it propping up the economy to some degree? Probably. It's shadow QE. They're buying up a lot of the short-term treasuries. The treasury issuance goes all the way. How far do you know how far the treasury issuance lasts? Is it all the way through next year?
I believe it's all the way through next year.
Golly. So this should run out by 2024. So that would align up by, and here's the zero bound. They this is inverted. I'm trying to think how this works. Oh, I have it inverted. Okay. So
Yeah, yeah.
either way, once it gets to the top, that's it. There's no more shadow QE. That's due to run out by 2024, which would give you the recipe for what, March, April, May, for a real drain, or I don't want to say crisis. I know everybody, there's
Nah, a big hurt.
big hurt. Yeah, somewhere a big hurt. Maybe that's what we get and going into the summer. And then maybe you get possible rate cuts on the table. Maybe the Fed balance sheet goes up a little bit. Yeah, I think that's it. But these are it. These are the things you want to look at. Shadow QE, also global liquidity. That's what I was going to bring up. China, dude, China's over here. I don't know if you saw, China's over here doing basically going to stimulate their stock market. They promised, not promised, but they're talking about injecting liquidity. I don't know how this works. But the story came out, I think last night.
It's all government owned, man. So I mean, they're gonna do what they need to do to prop up their economy and keep it from crashing because it's in their government's best interest, and there's no real separation.
Yeah, here it is. China weighs new stabilization fund to prop up stock market. Are we gonna get one of these?
If it becomes the United Communist States of America.
Right. And the reason I brought that up is because uh global liquidity should pick up, and I'm wondering, okay, if they do pick this up, let's say China starts to recover, do you think they start buying back treasuries?
Again, you got to look at it from the geopolitical scale. Do they attack Taiwan? If they are serious about taking back Taiwan, that's going to cause global conflict with the United States. They can use that leverage to financially hurt the United States. So I think they don't buy back treasuries if they wish to escalate it and get into Taiwan. If it's just bark and they don't do anything, yeah, I mean they're going to invest in treasuries
Okay.
just because they need to stabilize, the yen versus what the rest of the world's doing, especially the U.S. dollar. So they'll buy treasuries to help with that.
Okay. That makes sense. Just depends on how they want to play that out. Uh that doesn't mean go buy
No,
stocks, guys.
no.
I know a lot of people, TikTok, they're like, they'd be like this. China is now stabilizing their stock market. You know who the best here are your best stocks to buy? Baba.
Yeah, Alibaba.
I'm like, bro, it's hilarious. People just
And
throw
then
stuff up.
and then the day the Chinese government decides that it's no longer a publicly traded company, they take it down and they take your money.
Right, exactly. Hey, would you ever do business in China? Do you know anything about the mortgage market in China?
Not really, no.
I wonder how they do that. I wonder how they do that because I know there's a lot of cities that are just completely empty. There's no real estate there.
You mean
Nothing going on.
there's a ton of real estate, there's nobody living there.
Nobody living in it. Yeah, nobody living in that real estate.
Half finished projects. There's a lot of uh, shady stuff that goes on, and again, it's all government sponsored and run. So I mean, I don't even necessarily know if you can have a mortgage. If you do, you're paying back the Chinese government. I'm not sure how it works, but I think at the end of the day, I mean, China's going to do what they're going to do, just strictly from their government's perspective. This is what we're doing. This is how we're doing it, and we'll print more money. We'll do whatever we need to make that happen.
Perfect. So okay, so to close it out here, let's go over really quick what we see coming in here. So I think to get a good pulse on what we're seeing over the next 3 months, consumers, do we both agree consumers are going to keep spending and maybe fall off in January, February,
Especially with
right?
the savings rate not being eaten up like it was.
Okay. You say not getting eaten up, you said?
Right. So it was consumer savings was supposed to basically zero out, I think, at the beginning of this month.
Right.
So revised numbers show that there's another $1 trillion that hasn't been eaten up. I think that keeps the consumer, giving them the ability to keep spending through the holiday. So the holiday rally.
Okay, and that was convenient, huh? Revisions. Uh
Yeah.
Looking at economic activity here, I think manufacturing continues to ramp up because those factory workers, I mean, they don't really the factories don't really rely on consumer spending as much, more fiscal investment, all that. So I think manufacturing does expand and going all the
Also
way
got to
to
make more planes and ammunition too.
right. So manufacturing never goes in recession is what it feels like, right? I think that's what we're looking at here. Services, on the other hand, maybe those really fall off January, February. We'll see. We'll keep you guys updated with the ISM numbers to see the employment, the new deliveries, production, because that gives you a real read on what we're gonna see here. I'm gonna keep my eye on that, especially going into. And do you think the services orders stop before you hit January? Because it's kind of pre-phasing, right? Like December, you're not going to get a lot of orders in December. Maybe all the orders come October, November. I'm
Yeah, I
thinking.
mean, I think you're going to see a lot of those come December. There's not going to be a lot of orders, just because again, it's forward looking, and they're going to be looking at it going, we're not getting that many orders. We need to slow this down.
So we're getting the rolling recession still happen, guys, here, which is
Sector by sector.
sector by sector. It's rolling around. Services led us out of the recession that we kind of had or didn't have, and manufacturing is now recovering. Now services is due to start to dip, not till another 3 months probably, but services will probably start dipping over. We'll keep track with that. Now, unemployment, the employment market is everything because if people have jobs, they're still going to overspend. When does that actually change?
Overspend. They're gonna spend. Come on now.
Yeah,
But yes,
they're gonna borrow their dad's. They're gonna, mom, please, 35 years old, mom, please let me use your. I know a lot of dudes who they're getting their 50-year-old mothers to spend money on a car. I'm like, bro, what are you doing? Like, pull, go get a
yeah,
second
gotta
job.
keeping up with the Joneses, bro.
Keeping up
Um,
with the Joneses.
Honestly, I think employment's already hurt. We're just not seeing it because of the part-time jobs and the seasonality of it.
Hmm.
Um, you're going to see an increase in manufacturing jobs, I think, but you're going to see a huge drop in services and a lot of the other sectors. So I think you start seeing unemployment spike um, maybe December, January, as it
Seasonal.
kind of leads us out of the holiday season, um, because obviously you're going to lose all those part-time jobs, and then you're going to start seeing as the economy really slows down, the unemployment number in other sectors really start ticking up. So I think end of the year, beginning of next year, unemployment starts ticking up in a meaningful way.
Oh, good call out there, Yassine. No, I didn't even think about that. So yeah, no, I agree with you 100%. Probably December when they're like, all right, we no longer need you guys. You guys did the job. We got the deliveries. We don't want no more overhead costs. Bye.
Yep.
Um, and then here goes initial claims picking up. Here goes all this other stuff starting to pick up. Yassine, we'll hit that in a second. Okay, so we agree on that. So maybe December, somewhere between December, January, February is when
Right
we
before
should see a lot.
Christmas.
Yeah, right after Christmas, right before inside of Christmas, so we see weakness. Possibly the Fed hikes or not. Maybe they stay on pause. It really 25 basis point isn't going to be that big of a change for the economy, I think, in the intermediate. Um, Housing still in recession, although I heard somebody say maybe not a recovery, but I heard somebody say housing can't really drop any further. Are we agreeing? It's in recession, but it can't really drop.
It can drop,
It
right?
can drop. Okay.
Yeah, I mean, if you see an influx of inventory, a huge increase in supply, you will see it drop because there's no demand. But again, that's going to take a pretty major economic event, and we'll be talking about more about unemployment than we'll be talking about housing at that point.
Right. We'll be talking well, I'm gonna watch the home builders stocks also. Keep your guys' eye on that home builder stock sentiment. Usually they give you kind of a signal where things are headed. If Josh is not on here to tell us. So I think that's kind of what we're looking at here. When do rates come down? I don't know. Maybe fiscal policy coming in, so there could be a dead spot in early January. Maybe it gets pushed all the way out. The reverse repo facility shadow QE will end by March, April, May, June, somewhere in the first to second half of next year. It seems like things just keep getting pushed down the road for sure.
They're kicking everything down the can. I mean, student loan payments were supposed to restart. They're already working out how you don't have to. More bailouts. So the government's doing everything they can to kind of, like I said, kick the can down the road, just like they are with the budget and everything else. So it's not going to hit like it's supposed to when it's supposed to, but eventually we're going to have to deal with it.
Right. Anything out of Europe that you've heard yet regarding macro? Do we even care about Europe at this point?
But yeah, I mean, we're all interconnected. Obviously, one of the biggest issues that Europe's facing is the strong U.S. dollar. Um, I think if you actually look towards the UK, if you watch their economy, I think it's actually going to be a leading indicator for ours.
Really
Yeah, I think their stock market, their companies are going to be a big indicator as to where the U.S. economy is going to end up or going.
interesting concept. I know they say China leads, then US, then Europe. But LVMH is the biggest company in Europe. And I think you're right because I mean that's all like consumer spending. So I mean nobody's gonna be buying Gucci bags in January and whatever else they sell. I don't even know if it's Gucci. I just know it's high premium stuff. There's no way people are
Yeah.
gonna buy that.
Well, and the reason I say that is because the US dollar, as long as it's staying as strong as it is, they're the ones that are going to be feeling the effects before we do.
Right.
So they would lead us into, a problem as far as being able to see when it's happening.
You heard it. That's an interesting take because people think the other way. I mean, it could happen, could not. But keep your eye on Europe. Some people say they're recovering already. But I don't know if they're gonna pump. Europe is known, maybe not Europe. The UK is known for hike, 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 and then something breaks and then cut, cut, cut,
Cut,
cut.
cut,
They're
cut,
known
cut,
for that.
cut. Yep.
Yeah,
Yeah,
they're known for
they do
that.
a lot of knee jerk reaction.
Maybe the Fed is gonna follow the playbook. December, that would be interesting. So yeah, let's look at this data. So you got New York State manufacturing index. This stuff has been, I mean, it's not really giving us any signal here. I would look out for this retail sales on Tuesday. Um, Retail sales, maybe they start to pick up. What do you think, Josh? They start to pick up, they stay where they're at. This is August, September. I think they might pick up just because the holiday season.
I'm seeing a flatline number. I'm not going to see him pick up too much. I think people aren't ready to start spending yet for the holidays. It's a little early, but again, they started putting Christmas out, and that's usually a pretty good indicator of what the retail shops are looking for. They might be hurting, and that's why they're putting Christmas out early, trying to get people to spend a little bit sooner on the holidays.
Yeah, go take a drive around when we get closer, drive around, see if there's many lights as there was last year. I bet with
Hmm.
these prices, there's no way.
Electricity? No
Yeah,
way.
yeah, there's no way.
No
So
way.
that's gonna be interesting. Is the consumer gonna be fiscally responsible, and just shift the energy costs to some, are they gonna buy more candy for Halloween? Not with all these, health drugs coming out. Maybe they do, I don't know.
Hmm.
So yeah, we got retail sales, industrial production. This is a key one. I've never asked you about this. What is your gauge on industrial production? From my understanding, is this just manufacturing uh output?
Yeah, I mean, it's just the output.
Okay. Output for
I mean, not
manufacturing.
necessarily just manufacturing. It's all industrials. It's what they're actually putting out there. So, um, you know, the things that are related to kind of the non-retail goods.
So that should be rising if the if we're guessing that this fiscal onshoring stuff continues with manufacturing. I'm
Right.
guessing and it's starting to recover a little bit on the year over year. This is going to be interesting. The housing market index, NAHB, home builders, right?
Yep, that's the home builders.
Lower, higher, even.
Lower.
Uh-oh. Lower. And that kind of keeps prices stabilized or higher, and because less supply, right? Less supply.
Yep. Yep.
Is that just for single family, or is that also multi-family?
That is strictly for the 1 to 4 units, which is residential.
Residential. Okay. So doesn't tell the whole story, because is there's still a boom in
There's still a
multi-family.
boom when it comes to multifamily. 5+ units, they're building them like crazy. Again, we
Okay.
have a housing shortage, so they're trying to fill that. Obviously, they can't sell as many single family homes because of the affordability issue, but they can build large complexes and rent it out and cash flow those properties. So that's where they're really focusing their energy on right now.
Okay, that makes sense. Building permits. Whoa. Those have been rising.
Yep.
Multifamily?
No, so again, builders aren't really excited about trying to sell homes right now in this market, but they do believe that rates are going to come down. They're a big proponent of the date the rate, marry the house. So builders are looking forward, going, look, when the Fed does cut rates and we see rates come back down, demand's going to skyrocket. And we need to be in a position to be able to sell those homes. A couple of my family friends is a builder here in Modesto, California. And the only regret they have about their current subdivisions is that they didn't build them all at once initially, some 500 units. They did them in phases because they're still selling rapidly. Obviously, they're not making as much profit on them because they're having to give concessions for interest rate buy downs, but they actually have a pulse on the consumer and demand. They know that by buying the rate down to the rate in the 5%, they still have a huge amount of demand. People are still buying up new construction because they're able to offer them a 5% interest rate versus the 7 or 8% that you get if you buy an existing home without some sort of seller credit. So they're literally, they've got a finger on when rates come down, what happens with demand because they're already seeing it. All they do is take care of it up front for a small pinch on their profits, and they're able to continue to sell those properties. Now, there are some areas where those new builders are starting to cut prices a little bit because that's the last thing a new builder wants to do is cut prices. Because when they start cutting prices on new homes, the previous homeowners are now underwater almost immediately because of the fact that you buy a house at the top of the price. And so, home builders, there are some home builders that are starting to cut price and do concessions. So those are certain markets where you're starting to see the prices start to drop a little bit
Okay. Interesting
and
take
heavy
there.
on the building.
No recession. You heard it. No, I'm just kidding.
Woo.
Housing starts. Woo. And these are new contracts,
Those
right?
are basically, yeah. And I still think those are going to kind of fall off the cliff in regards to, like I said, there's very little demand, but builders already saw this coming, and so they've already started pulling back on their phases and their construction, and they're just trying to get what they started finished, and wait it out.
Okay. Don't get stuck now. Oil guy. I
Yeah,
heard. I heard
happy back in the
the.
day.
I heard the U.S. refilled the SPR
I didn't hear that. That's pretty impressive.
on that spike. I guess it was on that big spike. That's what I
Oh
heard.
Lord. Seriously, they refilled it on a high oil price? That's just genius.
Bro, we need
Who
to
was
get
the
a.
economic advisor that decided to do that?
Yo, we need a Nancy Pelosi to trade oil
Right?
because you know.
We know
Uh,
it's gonna happen. You know what? We know it's good when she does.
right. Oh, we got the Fed beige book. This is going to be big, even though it's not highlighted on here. Basically, what is the Fed? What
What
is
are they
their
saying?
outlook? Yeah, what is the
Yeah.
Fed saying? This one's good. It really breaks things down
Yeah.
completely. So we'll do that one. We'll check that out. That's on Wednesday. We'll get your guys. I'll get your comments. We'll do the technicals. Josh doesn't do technicals, so we're trying to squeeze him for his time right now. Philadelphia Fed manufacturing continuous jobless claims, prices paid. I mean, existing home sales. Those will probably. I
Keep
guess
going
you're
down.
thinking keep falling here.
Yep.
Ooh, this is gonna be tricky. Okay. Powell speaks on Thursday.
Ooh.
Okay.
Where's he speaking at?
I mean, I wish it would tell. It doesn't tell us. I don't know. I
That's
need to.
always you can tell kind of what he's going to talk about and how much information he'll give you. I think the town hall he did with the teachers was pretty. So
Bro, I look like a fool. I was like, "Oh, Fed speak today, all
yeah,
prepared." And
I remember you did it live, and he was talking in front of the teachers, and they're talking about what should I teach them in school about
yeah,
what's important about economics. How do you make it fun? And I'm like, well, that has nothing to do with the economy.
yeah, nobody cares. I was like, "Damn, bro, I got played." Somebody's like, "Hey, well, do you know what he's gonna speak about?" I need to do a little more research on that. Typically, when you get played, then you look forward to, okay, I'm not getting
You
played
just
again.
got
I
to
got
look where he's talking at. You know what I mean?
look where he's at. Okay, yeah, not at the
Yeah.
kindergarten school. All right, so then you got Goolsby. He's pretty dovish. Barr, I don't know. Bostic's dovish. He's calling for a pause. Harker's dovish. He spoke today. He said we should pause here, and then Friday. So a lot of Fed speak this next week. Watch
Thursday.
rates at the end of the week, and then housing. It looks like we just have housing, economic activity, housing, and Fed speak next week. Not big market movers. Earnings are going to be it. We're looking at earnings here. That's going to be for the stock market. We're looking at earnings. Other than that, all this housing stuff should continue to fall. And yeah, that's what we got.
Yeah, I
Um,
think if you're going to trade on the home builders, I would short them because the news isn't going to be good out of anything that's related to real estate right now.
yeah, short the home builders. Anything else you want to add, Josh, before we switch to the technicals?
Ah, man, I appreciate you having me on. This is always fun.
Thank you. Thanks for giving us the insight, the wisdom I do not have. I appreciate you. Stay blessed this weekend. Have a good time with
You
your
too, my
family.
friend. Thanks, man.
All right, guys, I'm going to take a small break and then we'll jump to the technicals. We'll figure out if you're going to be losing money or making money next week or the next month. We'll go over the macro and the dollar. All right, give me a second. I'll come right back and then we'll get started. All right, let's get these technicals. Let's take a look at these technicals here. All right, Yasin. Also Carbides had some. Let's pull up those charts that you put out, Carbides. If you're still here, this is the AMD. He has an AMD, and I'll look on AMD. I think I can I zoom in on this? Let's see, open in browser. Oh yeah, there we go. Cool. So this is the AMD trade. I'm gonna open these AMD because AMD is looking really good right now. So we have a couple charts here. First, let's go to SPX, see what we're looking at. Trader chart dollar. All right, so macro forces here. Did I miss anything, Yassine? You're from the Netherlands. Pretty sure we're in a recession. Yeah, probably. What else? You don't want to be rude, but could you also tell with the impact on the dollar stock market if the numbers are higher, lower forecast? I find it easier to learn that way. Yeah, next week, not a whole lot. It's going to be mostly Fed speak and technicals for that stuff that comes out. Ivan, what up, Ivan? Oh, you're from the other channel. What up, Ivan? Welcome to the channel. All right. So, anyways, we're looking at the dollar here. Listen, the reason we don't know the exact reason. It could be a risk off event, but the dollar bounce is not what you wanted to see for stocks to go higher. Why? Because the dollar is, it is the wrecking ball. Everything's priced in dollars. The faster the dollar goes up with speed, which yesterday we got, speed. It looks like it's trying to push up. That's going to not devalue, but it's going to push asset prices lower. So we're seeing that happen. We wanted it to crack. Maybe it gets rejected here. It is at the trend. It is at the trend. If we check the RSI, it's not that strong. So it does kind of say rollover, not exactly. We'll see. If price gets back to the top and the RSI is still kind of muted, then that should be bearish divergence. So we're hoping the dollar rolls over. Now, the good thing is we are getting 30-year yields pull back. Okay, finally pull back a little bit. 30-year rates pulling back. There's a bid in the bond market probably for coming from the risk off environment from the war right now. So that's kind of helping stocks or easing financial conditions to some degree. So we got that. Oil, big bounce on oil at that 83.50 level. This was the historic level we've been watching for a while. So it is bouncing at that level. And we got above the previous. That was a big bar. So oil trying to step up there. We'll see if it continues. And just keep in mind the Saudi prince is going to contribute to keeping the oil market pretty much muted. That's what he's saying, to help out the U.S. Congress. That's part of the deal, part of the pact, to increase production if they have to. Right? Nat gas, not going up. So this is good for electricity costs going forward. VIX did have a big spike, peaked out at 20 again. Nasdaq volatility didn't move as much. Bond market volatility, maybe picking up for the trend. All right, let's get into S&P technicals. All right, so S&P technicals, and then we'll go to AMD, and then throw out your questions if you have them. Let me know your questions. So right now we are looking at, let me make this wider. Let's get bigger on here. And then hopefully you guys can see those lines. We're in a falling flag pattern for SPY. There's a clear resistance at that previous support, right? So the previous support is we're at a critical level here. Does S&P support the trend? This is your trend here. Does it support the trend? And does it support that previous support level? Or does it get below? So what would be very bearish is if we actually do see price where's my brush at? If we do see price get below, it kind of bounced today, but if you see price get below here and then start to get rejected at 432-ish, 431, if you see that rejection, that's going to be very bearish. We're probably coming back down, right? And we saw that here, bearish. We got through it, but we did not support. Well, kind of, maybe next week we'll see how that actually plays out, right? So you want to get above this and maybe start to hug the trend here, right? This is your trend. You want to see a hugging of that trend and then a burst back up. There is a gap to fill at 438.50. We never filled the gap. We got halfway through. I think we can push back up. I think there's a chance we push right back up to fill that gap. So that's what we're looking at here. Now we break out the moving averages. Okay, we do have support on the 200. So if we do pull back down, I think we do just touch the 200. I don't think we're gonna the 200 moving average here, daily moving average. I think we're gonna support that before we break lower on the flag pattern, right? So that might be it. The 50 may cross the 100. That's going to be bearish. That is a death cross. Doesn't mean everything's going to crap, but it does signal weakness. So we'll see if the 50 can bounce. We need this bounce to happen within the next week or two. Fed speak next week, economic activity, housing. I think the Fed speak is going to make a big deal. And how many people are positioned to buy this rally. So that's what we're looking at there. We don't have anchored VWAP on this one. RSI. We did bounce off the lows for RSI, and we're still pretty much weak on the oversold, pretty much oversold. Now this one actually looks a lot better. This is the CMF data, so it's going to be buying pressure last 20 days. SPY showing some bullish divergence here. And what I mean by that is if we take a look at the brush, okay, we use the brush, look at price, how it's making lower lows. We're getting lower lows, but the buying pressure last 20 days is showing an increase. Okay, not the RSI yet. The RSI is not as steep, but the CMF is. And that's another measurement of, I think it's called what, the chain monkey something. I don't know. I don't know exactly how it works, but it is the last 20 days of buying pressure. It's another indicator for momentum. We need to get above the 0 for it to really start to burst out. Either way, you are getting some bullish divergence in that respect. Okay, for the Qs, same thing. The Qs are climbing, right? Even though price is falling, you're getting this buying pressure start to pick up a little bit. I want to see it on the RSI also, so I'm not too excited about that. I want to see it on the RSI. What's going on with the mouse here? All right. Now the weekly looks a lot worse, but it is picking up for the weekly RSI is picking up. CMF doesn't look too good, but we're not going to look at that. I think the Qs look a lot better. If we take a look at the Qs look a lot better than the Nasdaq. You can see that we just touched the top of the trend, right? Typical price action here. We touched the top of the trend. This is, I guess you could call it. Let's see. Let's drag that out. You could call it it's really the first touch. I would say it's the first touch because this is not really a touch of the trend. This is more so this creates the trend. Once you get 2 points, that creates the trend. I guess you could call this the first touch, and this is the second touch. So you're bouncing off that trend. Now on the downside or on the support side, here's your support, and then maybe we come back down. You either support here or you support somewhere around here. You want to obviously see it, hold this trend. It did get pretty elevated 1, 2, 3, 4 days in a row of upside. We made a little capitulation top, and then we came back down. It is earnings season. This is what's going to drive everything. It's going to be earnings season. So that's kind of the cues. When we look at the cues, earnings season is going to drive things. I think we get a beat here in earnings season. I'll give you a reason why. Oh no, what am I doing? Well, hollow candles. I wanted to throw on the daily. Oh, this is the daily. What does the weekly look like? Let's take a look at the weekly here. Yeah, see, and I see your comment. We'll get to it. And hey, this looks pretty constructive. This is a really bullish, like if you're a technical guy, this is very bullish. It just takes time. You are getting the 50-day moving average about to cross the 100 weekly moving average, my bad, weekly. And what does that give us? That gives us a golden cross. NASDAQ is really just a spring. It is coiling up for the breakout. That's what I see going forward. Yassine, yo, Jeremy. Can we look at CME Fed watch tool about hikes? But is there something that tells you about hikes for BOJ or BOE or other banks? I don't know. I'll have to look into that. Yeah, we can look at the hike probability. It did go down yesterday. We'll see if it actually went up today. We'll check that out. And then we're going to look at the AMD data or the AMD technical. So let's see CME group, see what those Fed hike probabilities are. CME tool. and then we'll come back to this. Oh, what is going on? All right, there we go. So hike probability, where'd it go? Up or down today? Oh, it went okay. So the hike probability went down. I think this is really bullish. I think I talk about this on Twitter today? Um, I mean, you got the dollar up, you got yields down. That's positive. Dollar up isn't the best, but inflation was rather weak overall. It's all coming from home away from, I mean, I'm sorry, lodging away from home. Okay, who cares? That'll come down. So that's the setup. After today's data came out, the market is pricing in a better chance of a pause. That's what we look at. Now the dollar should be falling here, Yassine, but it's not. The dollar's not falling. So that tells me that the dollar narrative is now going to be dependent on the geopolitical risks. Do those risks geopolitically rise? Does Iran get involved with the war? Does it escalate? If the war escalates, then the path of the dollar is going to be higher. It should be higher as a risk off safe haven. Most transactions are done in dollars, most debt is in dollars. So the dollar might go up. That's my guess on that. If it doesn't escalate, then the dollar should come down. So I think that's what we're staring at here. Honestly, I think that's exactly what we're staring at. The inflation numbers look pretty solid. Um, this is a Santa Claus rally data. If you want to look at it, I'll update this week over week, but I think we look pretty solid there. All right. And then what else did you say? We have, if there are any other tools, tell me, bro. Yeah, I'll let you know if there's any other tools. I haven't looked at the ECB hike data. I don't really know. Because I know you're watching futures. What we could do is take a look over here. What up, Tigger Media? Take a look at currencies really quick. See what's going on with China. US dollar yuan actually was weak today. That's interesting. So the dollar was weak against the yuan, even though it was very strong in the US. It pulled up barely. Who is this? This is dollar futures. Hey, dollar futures much weaker than DXY. That's interesting. DXY had a big run there. Who is this? Euro, dollar versus Russian rubles. That was weak. So even though the dollar spiked in the US, it's not really spiking against the Russian ruble. Pound sterling a little bit. Who is this? Canada. Nothing for Canada. Swiss franc. It's whoa. The dollar's very weak. Man, maybe you want to go long Swiss franc. It looks like it's breaking down here. It's been pretty weak. Let's go to that daily chart, see what it looks like. So dollar Swiss franc is weak. That's interesting. A lot weaker than the other indicator. What do we got here? What is the difference between an MA and an SMA? Same thing, moving average. I probably just interchange the language. I'm interchanging the language, but moving average is what it stands for. You have EMAs and SMAs though. So the simple moving average, these are simple moving averages or moving averages in general. I interchange the language there, and they're just the last 200 days, the last 100-day average, the last 50-day average. The exponential moving average, the EMA, I don't have the EMA on here. I could, let me see, where can I put the EMA at? That's liquidity. I don't want to look at liquidity. If we throw the EMA on, I think I have room to add another indicator. The EMA is going to be volume weighted. And so the EMA is going to be the last, whatever amount of days we can do, the last 20 days. I like to do the last 20 days. That's like the last month because you have 5 trading days. Unless it's crypto, it doesn't work as good. No. Smoothing. Let's go EMA. What does the smoothing mean? I don't even know what that means. Either way, let's do EMA and then let's change this to, let's change the color to, let's go here. All right. So the EMA is going to be, and I don't want to look at this currency. Let's go to the NASDAQ. No, not crypto. Is crypto selling off? Let's go to the NASDAQ here. So the EMA is going to be, here's your EMA. We bounced off the EMA. It's gonna put more emphasis on the volume for the closer to the recent day. So it doesn't equal out the volume for the last, let's say, last 20 days, I think is what I have here. It's not taking the volume from all 20 days equally. It's putting more weight on the days, the most recent days. So there's more volume weighted towards what people are doing today versus what they did 30 days ago or 20 days ago. So this gives you a more immediate average there. Watch, take this off. And looking at NASDAQ, it looks like we're bouncing on that 20 EMA on the daily chart. It doesn't look bad, right? SPY, more immediate on the, it's going to give you more, SPY is below. So this is just more volume, more price action on the immediate volume for the last like 5 days. That's what I would say. That's how I'd put it. You don't know exactly the weight of volume, but it's going to take volume in that way. Any more tools? Let's see, if you're definitely looking at, if you're looking at forex, I mean, I'll let you know if we're looking at forex. I'll let you know. I don't think there's any other tools that I use. I just try to digest this stuff a little better. So yeah, geopolitical risks that might push the dollar up for sure. That's my guess. Um, Now let's look at this AMD trade. I'm gonna pull this up. I don't know if Carbide is still here. He probably pieced out on us, but he had this. He had this for us today. And let me try to look at this, what we have here. So yeah, AMD, you got the EMA cross back here. What is this? This is what chart is this? 30-minute chart. So he has the 21 EMA and the 50 EMA. You got the 50 cross the 21. I'm sorry, you got the 21 cross the 50 back in October, early October. So AMD is breaking out of a downtrend. It is pulling back. He says the next target is about 102. This is his measured target, somewhere around 102, based on rising channel break. So about 102. Oh, that's good. Okay. And then this is for what? SPY? Okay, he's using the 200. Is this target 200? Got rejected off the neckline for that head and shoulders neckline. We got rejected off that. Yeah, that's about right, but we're still on trend. So we'll see. We might revisit the 200 moving average. Longest ticker of the week goes to longest ticker of the week. All right, let's look at AMD in real time. Makes sense though. He says 106 is what we're looking for. I mean, not 106, 102. Which is the support? Which is the previous support? Let me take some of this off. This is the wedge that we broke out of. Actually, let me turn this red and make it a line so it's a little clearer. We are breaking out of this wedge, or not. You don't have to call it a wedge. You could really just call it and then here's your trend. Could just call it a falling flag pattern. That's what I like to call these, or a wedge, whatever, sideways wedge. It's breaking out of that wedge, and it is on trend to keep going higher. But again, you always have the chance, and this is a good buying opportunity, I think, for AMD if you can find intraday support. Maybe on Monday you get a gap up or a gap down, and a support on VWAP, a support on the previous day close. CHF. I don't know what CHF is. So either way, 102 is where he had that pullback. And this would be the support, 102, somewhere around here. But I am liking AMD. I'm going to be looking for an entry, possibly. I'll be looking for an entry on AMD next week because AMD is not going to be subject to consumer spending, right? If consumer spending falls, even though I think consumer spending goes up this quarter, the market's going to look forward into January, February, and what do you get? You're getting the Chips Act stimulus coming into chips. So AMD has a pretty nice chip. It's still top 3, top 5 chip makers or device semiconductor companies, and this could have a lot of room to run if we do the Fibonacci. Let's see where the golden pocket is, and then where the 1.618. So it should retrace back to here, which would be the downtrend 118. And if it does break out, we're looking at what, all-time highs, somewhere around all-time highs. That's what I'm thinking. We'll see how this plays out, but you want to find a good entry here more than anything. And I think AMD is showing us that it's ready to start going up. If we look at the RSI, it did finally bounce, pulling back here. Let's look at the moving averages. They don't look amazing. It's on the 100. Moving averages don't look amazing, but once you do clear 110, should look pretty good. AMD is a wild card. Weekly chart. That was a big top there on the weekly. I want to see a doji. Maybe 102 is the spot, but oop. But yeah, AMD looks solid. I like AMD. Now, of course, the price action for Tesla looks even. I don't want to say it looks better, but it's going to come down to earnings. You have, I think, 250 is your support. Tesla is just wedging. Remember the last wedge? It wedged here. Let's go to the. We can stay on the weekly. It wedged around here, and it broke down on earnings, and then it just capitulated back up. So we may see that a breakdown and then a capitulate back up, see it gap down, and then it found a bottom, and then it soared for the remainder of the quarter. Maybe it gaps down. It could gap down if it's nasty. It gapped down last time, so twice the charm. I don't know. Could gap down and then run higher, or depending on the guidance, and I think the guidance is going to be key for Tesla. We could gap up. If it gaps up, it's running all-time highs. I'm going to tell you right now, if Tesla gaps up because they're expecting better guidance, they're gaining market share, even though there's an argument that they're not. It's hard to determine. I think we break out and we go much higher from there. CHF is a risk currency, risk off currency. I don't know what CHF is. GDX, how do you say XOM did well for me today, but consumers' confidence crushed the tech sector and bonds? Live to play. What up? GDX. What is GDX? Is this gold? Oh, it is a gold miner. Oh, you guys are Forex traders, I'm guessing, huh? GDX. Gold miner. Let's take this back here. Okay, so GDX. I mean, it looks like it wants to break out. What's driving gold? Gold could do well in a geopolitical risk. Gold could actually do well. Not that you want to root for it, but it could go well if the political geopolitics if the war starts to escalate, gold could break out. Oh, what up, Polar Vortex? Okay. Now I know who you are. Live to play 9. You said you were going to change your name. That's all I know you. You said CHF though, Yasin. I don't know what CHF is. CHF is a risk off currency. Anyways, what up, Polar Vortex? For Tesla, you think a possible breakdown before or after earnings, looking for another long-term buy. Tesla's going to be tricky, man. I mean, Polar Vortex obviously thinks it's going to break down. But I think when it comes to Tesla, there's no clear answer here. Let's take a step back and think about this. Earnings are not earnings, but let's see, what are they expected to hit? The expectation is 73 cents on the earnings side. Was this a very weak quarter for them? Yes, because they started to spend more on the new factory for Cybertruck. It's Swiss. Okay. We started to spend on the Cybertruck, right? And they didn't have as many as deliveries as estimated. So I think the earnings could miss. I think the earnings could miss and the stock could sell off. This is a real scenario. Miss earnings and they sell off, but there should be a bounce if guidance is higher. What's going to get guidance higher? Well, we are heading to the fourth quarter. Seasonally, Tesla performs the best in the fourth quarter. There's more, deliveries are still going to hit the end year target. They should, and they're going to give guidance on that. And then next, you have all the price cuts, which while other prices are rising, that should create more demand. You have the Cybertruck release, which is why I think it's more likely, even if it doesn't break out initially on earnings, that there's going to be a bounce because of Cybertruck. People are going to play the Cybertruck. And full self driving, they might unveil who's going to license full self driving. Maybe they don't, right? And then you have the tax credit going into the fourth quarter, which starts around here. Just to give you the tax credit, is the rebate is here. January 1st is the rebate, and the rebate is you go in store and you literally get a rebate. So they take $7,500 off the price. I mean, they're crushing prices right now. This is pricing power at its finest, where you can actually drop prices and retain demand or increase demand. Revenues might drop. We'll see, because obviously they're selling for a lower price. But we'll see if the demand exceeds that. Either way, you're looking pretty far out. Tesla's a really risk asset, and it needs lower rates. Trading quarter to quarter, it needs lower rates. It needs the dollar to come down a bit. But man, if the Cybertruck really hits or the earnings call is really good, this thing could definitely lift. Also, the energy segment, maybe the energy segment is a lot better, and we'll find out. But there's definitely the possibility that it retests like 200 on a nasty rip lower. I think at the lowest, probably 220, somewhere between 235 and 220, right? Could rip down to there initially, but everybody's expecting that. Everybody's expecting a bad earnings report. So this really sets you up for a short squeeze if it doesn't go their way. That's my expectation. I have no, insight into whether it's going higher or lower. It's all going to be about the earnings call for Tesla. Tigger, the trend has been for most things to sell off after earnings, good or bad. Yeah, that's true. A lot of companies have been selling off, and it really depends on the overall index too. Right now, the setup is going into I guess it doesn't show earnings on here. Going into the last two earnings reports, the SPY was moving up, right? Or the index was moving up and then stock sold off. So we might get the opposite. If NASDAQ does come down into earnings, it could be weakness into earnings and then a reversal, which I think is more likely based off the price action, that we get weakness going into earnings. And let's just take a look at Apple, because Apple is pretty much S&P. And you can see that this earnings report, right, going into that earnings, which is Apple is like mid earnings, a little, it's a little mid, like you have a whole month of earnings. Well, the stock ran up, so S&P pretty much ran up in earnings, and then a lot of stocks sold off. Apple didn't. A lot of stocks sold off. And then running up into the next earnings, same thing. A lot of stocks sold off. Apple sold off this time. This time is different. We're selling off into earnings, right? When's the last time we had that? Here. We sold off into earnings, kind of, for Apple anyways, and then we bounced. This was February 2023. Let's jump over to the SPY. I wish the SPY would have the earnings reports on here. So here's what we had last time: a sell-off in earnings. Even though earnings weren't the big deal, this was more macro. I know that might be a little confusing. I was just trying to use Apple as a barometer, since they're the biggest. They're going to have the biggest earnings pretty much in the market. So selling off into earnings is positive, I think, going forward. I think that could be positive, selling off into earnings. Would you say Tesla sells so many cars in Massachusetts because the dealer is next to Hooters? Interesting. Okay. Also, I saw for Tesla that the online orders, or the online traffic to the website, was increasing because people are seeing the price cuts, right? Model S dropping. Oh, here's a Christmas present. So we could get a lot of orders on that earnings call. You could get extended, not extended, but a real, investors might say, okay, this quarter sucked because they cut prices, but we're going to expect demand to go up and the Cybertruck deliveries. Am I currently long or short or neutral? I tried to short Tesla the other day. I should have shorted it at 264, and then I was short at 264. It broke out on me. I covered the short and then it dropped on me, so I screwed up on that. But I'm still long. I'm still long Tesla. I'm actually, depending on how things go on Monday, I might buy another call at 250 if it can hold 250 and we see the market start to lift. Is, what earnings do we have next week? That's the big question. What are the earnings coming in for next week? Nasdaq, S&P, let's see. Earnings for next week are, so I like the setup. I like the setup. When the market runs up into earnings, typically the market already priced in good earnings. Now right now earnings are set to move up. Q3 earnings are set to be higher and the market is selling off. So I think this is a good setup to go higher in my view. Let's see Monday. You have Charles Schwab. That's it. Nothing big. Bank of America on Tuesday, J&J, Lockheed Martin, Goldman Sachs, another bank. Tesla on Wednesday. I mean, that's going to be the big one. Consensus 75 cents, 24 billion forecasted for revenue. We'll see how that plays out. I'm still going to stay bullish, maybe not on the earnings report, but I think the guidance for Tesla will be better. That's my view. I think the guidance will be better. I do not advocate any trade in earnings, especially for Tesla. You should wait till after earnings unless you're a pro. Unless you have a plan and you're like, what is this? Israel delays all-out assault on Gaza amid growing international pressures. Israel is delaying the assault on Gaza. That's what I just saw right now. But yeah, I am new. I'm long Tesla right now. I'm long the stock. I have calls into 2024 though, and I'll sell those. I'll sell against those calls if I need to. I screwed up. I should have held my calls the other day. I should have shorted them and held it because the market was oversold. Nasdaq was oversold, and I didn't. But it is what it is. You forex traders look at AXU USD. I'm holding AXU USD since 1856 because of this war. Oh, because of this war. So you're long gold USD. Hey, I don't know about gold USD. The dollar might really rise sharply against gold. Maybe go gold. Who's printing money? Maybe go gold yen. Maybe gold yen. Let's see what that looks like. Can you go gold yen? You can't do that, huh? Can you? About USD yen because China's set to actually, or it's not yen, it's yuan, huh? China is set to, no, that's not it. What is China? What is the Chinese currency? I don't know. I don't even know these tickers at all. But I would go USD China if things escalate because China is printing money, so they're devaluing their currency. If the war escalates, it's either gold goes higher against. I don't know about gold dollar. That's just my initial thought because the dollar is showing us that it's strengthening against, strengthening with the risk going up. Would you say Tesla has cut prices 6 times this year? Can you imagine having purchased the vehicle a year ago and trying to sell? Oh yeah, that would suck. Those people are pissed. I'm sure they're pretty pissed. Um, but the car actually appreciates if full self driving does come online. So that's the good part on that. Yeah, check that out though. Would you say connect Tesla all time highs to current highs, super trend line? Oh yeah, yeah. This is Tesla all time highs. That's what I'm saying. If this breaks out in after hours, I mean it's gone. It's gone. It's going all time highs. Um, or at least like 350 initially. If it breaks down, I still think we bounce. It's just gonna have to take some time, like it did back here. And you're gonna have to see some positivity. Either way, like the UAW strikes are going to hurt other automakers, and it's gonna be a hedge Ford, hedge GM. Why bet on those guys? They're gonna lose market share. Their businesses suck. They're gonna go under because of the wage increases. Like they're in trouble. So I think Tesla is just going to be a hedge. Also, it could be a hedge trade against those guys. Got to break up, hard to survive. Would you say got to break up, hard to survive? I'm still bullish through January. Just need these 10-year treasuries to chill. Okay, cool. Vortex. Yeah, me too. I think we fall off in January, February because the seasonal spending, the seasonal employment is gone. Maybe because gold is priced in dollars. Yeah, gold is also priced in dollars. RMB. Oh, renminbi? What? I thought, can you go renminbi USD? Oh, I don't know. I don't know. RMB though. Let's try RMB. This is renminbi, rhombus. That looks bullish. Yeah, I don't know forex like that. I don't know what the tickers are, but my guess would be if the conflict escalates, dollar goes up and gold goes up. So I don't know. You take that trade. You figure out how that works. And then in the back half here, again, you guys already know with crypto, you get Chainlink pull down. By the way, JP Morgan is now tokenizing their assets. This narrative continues to grow. Uh Chainlink is holding up there. Ethereum kind of looks like trash right now. Eventually we'll see how this plays out. Yeah, so it is earnings season. That's what I would look out for is next week. Tesla's the biggest reporter. You have Netflix in the same day. And two, Netflix has been selling off. So this could be a bounce for Netflix, even though I mean they sold off tight. Like look at that. Look at that RSI, extremely oversold for Netflix. So I think Netflix could bounce. Maybe it doesn't stick. It's below. It looks like trash, but it's super oversold. It should bounce and then maybe roll over after that. I guess we'll find out how that ends up playing out. Do you trade options or also any stocks for long term? No, I don't hold any stocks. I did have Palantir for a while, but I am no longer long Palantir. I'm no longer long Palantir. I still think I'm long Palantir. I think Palantir is still the best bet, but I need it to chill out and consolidate a little longer. And you know, I'm just long Chainlink. I think in this cycle, crypto greatly outperforms any stock. The only stock that could outperform crypto was Tesla, but Tesla's market cap is so big, it needs it needs a lot of positive catalysts. So I still think crypto is the best catalyst here. That's I'll always say that. But I do trade options, Tigger Media. I am long Tesla at the moment. Did you say I call that a descending triangle for who? You talking about Tesla or AMD? What was I looking at? I don't know what I was looking at. Oh no, that ain't nothing. Starting to think Tesla is the best, safest long-term bet. It is the safest. If you're looking into the future, baby boomers are going to think it's too risky, but that's because they're not. You know, if you're betting on innovation, we're at the age, we're at the time where innovation, disruptive innovation with a strong balance sheet, you know, revenue growth, adoption, those are the safe bets, not the other stuff that's old because they're gonna die. So I think those are the safe bets, and Tesla for sure is the safest bet if you're looking really far out. And Elon continues to innovate. Did you talk about the SEC deciding on grayscale BTC spot ETF tonight before midnight? No, I did not. I didn't even know that. What did they say? They said tonight before midnight. Spot ETF, bro. I really doubt that. That sounds kind of sketchy right there. That sounds sketchy. I don't know if that's gonna Doifer, but that's interesting. I didn't know. I did not know that they were talking about that. I think I'm more focused on. Oh, what? Oh, Link got a bid. What the heck? The last couple seconds is that why? The reason Netflix fell off a cliff was they reported their ad tier is not going well. Oh yeah. I mean, also they suck. They're losing to YouTube for teens. They're secular. And dude, Netflix has sucked lately. They just straight up suck. There's nothing good on Netflix. They got too woke. Show sucked. We want to see, I mean, people are not going to watch woke shows for the most part. They're trash. But anyways, yeah, Netflix needs to bust out with something better. They're gonna fall off. That's my view. Half the revenue they expected. Dang, yeah, that sucks. They're losing their edge. They are losing their edge. All right, so before I go, we've been here 2 hours. My back's about to break. I can't be sitting down this long. It's not good for your back. I'm gonna go over really quick as we head into earnings season. If you are betting on something, you want to see pure revenue growth, demand for the product, right? For Tesla, AMD, I think it's going to be there. Guidance is going to be important for sure. You watch my stream way more than Netflix. Yeah, Netflix sucks. I used to like it, but there's just nothing good on it. Pricing power, strong brand. I'd argue that Tesla being able to cut prices is pricing power, even though traditionally pricing power is you can raise prices and people still buy. I would say that in reverse, they have a good enough balance sheet, a good setup against the other OEMs where they can cut prices, or else they wouldn't do it. They can cut prices, and maybe it seems like a desperate move, but it is a desperate move. Rates are too high, and it does. And here's the trick: if Tesla was competing traditionally against everybody else, price cuts wouldn't be that good. But what it does is psychologically, people are like, okay, the price of a Tesla is dropping. Okay, there's EV tax credits minus $7,500 in January. I think it creates more demand, and I like that. I like those odds. Increasing efficiencies. Well, the cost to build a battery is going down. Margin retention is the name of the game for those, those cash cows. Low debt, big cash flow. Tesla has that. So does Apple, Amazon. Meta also. Look, advertising should spike. Eli Lilly. Man, I heard that so many times from Jim Cramer. Whoa, this thing is spiking. What is it? The new drug that they came out with? Wait for a pullback in Eli Lilly, bro. I wouldn't even. I mean, if you as a trade, maybe. I don't like these new loss drugs unless you're like incredibly obese. Never take a drug to lose weight. That's stupid. That's just stupid. It's not gonna help long term. You're gonna get addicted to it. It drops your appetite. Well, you're not gonna eat enough calories. You need more protein. That's an easy way out is to take a drug unless you need it because your health is, your life is at risk. That's totally different. Um, Eli Lilly looks good. I mean, it sold off, it broke out. I would wait though. I'd definitely wait for it to consolidate a little longer. I think the play for Eli Lilly would have been the break here. Once you got the break, you had two volume bars, and then this was probably your bet. Why? Because it broke across this consolidation. So somewhere in the middle of this day, which would have been, let's look at the intraday. What was this on the 9th? Somewhere around the 9th. Did it form any type of pattern here? I mean, that was a big dip. You also had right here. Ooh, yeah, you had the gap up. This could have been a play because you gapped up above prior resistance. It looks like a reverse head and shoulders there, right? Reverse head and shoulders. Here's your shoulder. There's your head. There's your shoulder. Broke above that, consolidated, and then gapped up. That would have been the play in Eli Lilly. And then broke above this consolidation also. So I don't like it, but as a stock, I don't really know about it that much, to be honest with you. I don't know about it much, so I can't say too much about Eli Lilly. A lot of industrials are going to do well though, because there's just a lot of fiscal policy to support it. Just do workouts, count your intake calories, avoid carbs. Yeah, I mean, if it is carbs, use fruit. Replace fruit with your candy. Look at it as candy if you're obese, morbidly obese. But for the most part, it's just, people don't do the work and the culture doesn't really support exercise. People have to work 3 jobs. They can't exercise as much, but you still have to try. Drugs are not the answer. unless you're at risk of something. I hope you're not drinking that poison. The Kathy Wood cells bring up a chart through your chart of ARC. You want to see ARC? ARC looks like trash. It broke down. It got resisted against the. It did hit. Hey, Kathy's going to be on CNBC, I think tomorrow or tonight. I don't know. We'll see how that. We'll see what comes on of that. Anyways, yeah, ARC looks like trash. I mean, no argument there. Zoom looks like trash. She should quit. She knows nothing of what she's doing. She got out of Nvidia right before AI wave. I mean, she caught that's just disingenuous right there. She caught Nvidia way before the AI wave. I mean, she bought Nvidia down here, bro. I think at $3. So, okay, so she sold Nvidia up 3,000%. I mean, that's disingenuous unless you're just trying to be funny. That's a stupid argument. Come on, you're better than that, polar vortex. Just do workout, count your into. Oh yeah. Also, if she's funneling money into Tesla, then and Tesla's the best AI out there, well, she's gonna win anyway. Just do what else we got? 3-year chart of ARC. That is the stupidity of Kathy Wood. A 3-year chart. Yeah, it looks like trash. I mean, I'd agree that she has a lot of picks that are crazy, but again, she's an innovation fund, so it's not a traditional stay safe fund. It is literally take all risk fund. I'm commenting on your most recent tweets. Okay, appreciate it. Doifer. Give me some you trying to give me some what do you call it? Some traffic there. Appreciate it. Wow, XUGPY is crazy. XAUJPY. XAUJPY. Is this gold? Oh, this one might be good, bro, because Japan is still stimulating. So if gold is going to move against, if Japan's stimulating, the currency falls while gold appreciates. So this might be a good one, and it's breaking out. I actually like that trade from a geopolitical standpoint. From the macro, technicals look pretty good. I like that better than X gold dollar. I don't like that gold dollar because they might both rise. Nothing happens. You can go gold yen. It's blah blah blah. China is CNY. Oh, China CNY. Okay. Yep. Same thing. Yeah, and actually, I like this one better. It hasn't broken out yet. I like it better because they're literally announcing that they're going to start stimulating their markets. That's going to devalue their currency. So, dang, crypto is moving. It's getting ready for that pump. I agree on your drug comment. It's going to cause a lot of intestinal issues. Yeah, I mean, it's just never good, and it's just not a good idea. You just got to eat better. People are just lazy. Americans are lazy. They want drugs. They want the easy way out. And that's just in general Americans want the easy way out, and they'll pay for it, which is stupid, but it is what it is. Yeah, that chart looks pretty solid. Normally when DXY goes up, gold USD goes down. When yields are high, gold USD goes down. Okay, that makes sense. When yields are high, gold USD goes down. That's tricky, man. I think the easy way is gold China. I mean, I could be wrong, but that seems easy to me. Maybe I'm wrong. Would you say there's a bold-faced lie? She sold Nvidia in January. I mean, even if she sold it in January of what, 2022? I mean, she bought it at $3. That's the thing. So she bought it at $3, so it doesn't really matter. It's pointless. She bought it. She sold it in. So let's say I mean, it's public information. So let's say she sold it at the lows. Well, she bought it at $3. Okay, I believe it's $3, and she sold it at the lows. Okay, up 3,000%. Okay, that was a big move. If she bought in video back, then bring up 3-year chart of ARC. No way, that's a lie. I don't even know what you're talking about at this point. There's no way she could have held Nvidia and have that chart go down like that over 3 years. Come on, bro, you're smarter than that. Um, I mean, she's holds other stuff. It's not like Nvidia's most of her portfolio. It's gonna be less than 10% of her portfolio. I thought you were just trying to say that because if we're talking about Nvidia, she held Nvidia. She made 3,000% in Nvidia. I'm sure it's public information. You can go look it up. But if you're talking about ARK in general, this crash in ARK is because I mean she held a lot of risky stuff other than Nvidia, right? I mean it's pretty simple. So hey, she's made let's say she hits 20% of the time. The other 80% are a bunch of blowouts. She's a lying piece of crap. Sounds like you got a personal problem. I think mostly she makes a lot of bets and who knows what she's doing, we don't know. But the stuff that makes sense to me. If it makes sense, like Tesla, Zoom, I like Zoom, even though she might be overhyped on Zoom. I don't know, maybe, maybe not. She was right about Tesla. She's right about Bitcoin. Those are the big plays. Those are easy to see. Believe that. Well, just go look up if she bought it there. I mean, you could settle it like that. Bring up the ARC chart for 3 years and you'll see the truth, everybody. I mean, that doesn't like I said, ARC was at 15 bucks, went up to 170. Now it's doubled if you go back. Either way, she still held Nvidia. I mean, how she positioned in her weighting is going to be it doesn't the fact is she bought Nvidia low, right? Unless unless I was misinformed, she bought it low, like $3, and then she sold it at the lows, but she still sold it for a 3,000% gain. Reuter headline: SEC does not plan to appeal court decision on Grayscale Bitcoin ETF. Oh, we got some play here. You lie about Tesla, you lie about crypto, and now you're telling bold-faced lie about Kathy Wood. I'm not coming back, bro. Enjoy your 5 viewers. Oh my goodness, bro. All right. Well, yeah, it is what it is. That's crazy. That's what females do. Um, she made money on uranium. Bro, that is crazy. That's hilarious. That's kind of hilarious, but he'll be back. He'll be back. I don't know. That's unfortunate that people throw fits like that. I used to be a teacher and I had to deal with emotional kids that, you know, freaked out over nothing, but it's like, bro, if you're still there, bro, just look up the documentation. I can disprove you on crypto for sure. Tesla, I mean, that's up for debate. Kathy Wood, is she a good investor? Like that's something to get pissed at. She's a good investor or not? Are you kidding me? Um, that is just silly stuff. Anyways, what do you mean about China stimulating China and Japan? Are they printing money? Yeah, Japan is, but China's starting to stimulate a lot right now. China is stimulating a lot. So if you go look at an article, China just said that they're going to try to stimulate their stock market. They're talking about it, and they have to. They're going to keep stimulating. So just look that up. Man, Polar Vortex is going to make me cry, man, this weekend because he left my stream. Anyways, yeah, I think that's it. I guess we'll see what the crypto stuff presents us. I guess we'll find out how this works. if it gets signed. Let me see. There has to be something on Twitter. And this was a long stream. SEC won't appeal grayscale spot ETF ruling according to a person. According to a person. That's funny. The House plans to vote on Speaker Tuesday. Okay. Well, I mean, we'll probably have a stream tomorrow to add everything in context. Anything new that comes out. Still think we're in a bull market. Until that trend really starts to break and holds lower, we're in a bull market, right? VIX is getting stuck at 20. Uh, Oil. Oh, the war. I mean, the war is a big factor. If the war accelerates, could cause some big issues here. But oil is starting to cool. I mean, if it gets back to the highs, I guess not, but it's starting to cool. The dollar is telling us risk off. And I think we're headed into earnings season. So here's the back to the Qs, right? The Qs are really what I think are going to lead because of their premium stocks, and they can borrow money to fuel growth going forward. So what you could see is just the Qs come back here into earnings season, possibly here, and then break out because we're in a seasonal strong period where employment will stay stuck, and we probably peak out. I know the guy's hurt. It's too funny because I'm used to like laughing at it, but I'm like, is that appropriate on YouTube? I wish he was on here. I try to tell him to do the stream. That would be way funnier. Um, Anyways, China and Japan. Dang. Yeah, so I think that's what we see, man. Year-end rally. I'm gonna pull some evidence again tomorrow. Don't forget to sub to the channel or sign up for the newsletter, which I'll put in the description. I guess I have to put on the YouTube description because I don't have it on there right now. I'll put that on there, and I'm gonna have that out tomorrow. If I get any other data that shows us where we're headed, then I'll let you guys know. But yeah, in general, hey, inflation is coming down. Okay, that's not the real issue here. It's does the Fed hike in November? If they don't, if the market starts to believe that they don't hike in November because of the data, the market's going to bid higher. That's going to be one headwind. The dollar moving higher, tailwind. If it comes down, headwind. I'm sorry, headwind, then tailwind if it comes down. Yields are easing a bit because there could be a rotation into treasuries as a safe haven. If that's the case, then they're going to fall rapidly. Those yields should fall, fueling valuations for stocks. Plus, stocks who buy back their own shares, they're going to fuel EPS. Okay. We're heading to stronger jobs, stronger employment seasonally. This should be a real, and look, seasonally stocks go higher in November, December, right? So I'm thinking we have one more push higher, then we sell off sometime at the top. When we get near the top, that could be it, right? Oil is still the wild card, but with the Saudi prince, with the war going on, I think the U.S. is trying to, trying to keep relations with the Saudi prince and OPEC to some degree. I guess you could say OPEC, to where they can increase production. They're trying to make a deal. I'm sure they're trying to make a deal here, and also, hey, fiscal policy, man, Inflation Reduction Act, CHIPS Act. I think AMD is going to benefit from that. Tesla, obviously, Nvidia is going to benefit from it. Nvidia is still moving higher. And grifters and TikTok, then hear the truth. Yeah, dude, people buy into like the fast. The truth is this: most people don't want to hear the truth. Most people want to hear what they don't want to take the hard path. They don't want to do what's hard. They don't want to do what's sustainable. They want to do what appeases them immediately, right? They want excitement right away. And that's cool. Have fun, but it's just not sustainable. So I do see a lot of scammers on different platforms where people say, "Hey, do this and I'll get you this." I'm trying to just educate people on what I know. I make mistakes, and I'm not always going to be right, but I'm going to give you the best information I can. I mean, we've been on here for 2 hours, and eventually, I'm just going to try to deliver as much as I can, whatever it is. And and I appreciate you guys jumping on. That's what keeps me going, is that you guys ask questions, and I don't care if there's only 5 of you. Great, I still like doing this, right? So if anything comes up, I'll put it on there. Hopefully boy, if they pass that Bitcoin ETF, we're going to launch. we're going to launch. I still think the best investment right now, over the next 12 to 18 months, maybe even longer than that, is going to be Chainlink, because everybody's using it. I mean, and when I say using it, as in they need the CCIP network to create interoperability between tokenized assets, stable coins. Banks are going to have their own private chains. JP Morgan just announced their own tokenization program, DTCC. So the securities settlements and basically the U.S. securities, I don't want to call it a company, corporation, whatever it is, who handle all security. So bond issuance, or not bond issuance, but bonds, treasuries, corporate debt, U.S. equities. They're going to be tokenizing their assets using Chainlink. So you look far enough down the road, this should be a big win, and we'll see how that plays out. Other than that, you guys have a safe weekend tonight. Have fun, stay blessed, keep a growth mindset. Like I said, eat healthy, take care of yourself, so you don't have to take those stupid drugs that Eli Lilly is pushing out there. And I'll catch you guys next time. Stay blessed, man. Hopefully this war, settles down and eases, and we'll stay up to date. But anyways, yeah, you guys stay blessed, man. You and your families, everybody else. Catch you guys later. Thank you again.